Good morning, warriors. We were in yesterday's class discussing and starting with Pgbp, right? Right, perfect. Okay. Summarizing what we did yesterday, we tried to discuss the charging section of Pgbp, where we tried to understand what are the items which are covered under Pgbp. We started with the simple idea saying that Pgbp tax is all Pgbp items, which means any profits and gains which is coming from business and profession is taxable under the head Pgbp. Then we came and we said, boss, if you are looking at other items, you have some indirect tax items, some claims of indirect tax, some refunds of indirect tax, some drawbacks of indirect tax, which is also covered under Pgbp. And then we discussed about some items like salary paid to partners, remuneration paid to partners, and a few other items along with three case laws. Ended the discussion with coming and saying that if you have any kind of Pgbp, you're talking about any kind of speculative transactions also. In case you have any speculative transactions, those will be independently identified, and any losses coming from these speculative transactions will be setted off only against speculative income. If you want, you can carry forward for a period of 4 years. You can carry forward for a period of 4 years. This is what we discussed in yesterday's class. Yes or no? Yes. Starting today with the core part of Pgbp, we are going to discuss what is happening in Pgbp and how do you approach the subject. How do you approach the subject? I told you whenever I do a chapter in total income, there are two things which is mandatory for me. One is called as the charging section. The other is called as the format of the income head. So what is the format of Pgbp, Rahul? One of the most easiest formats. Yes, we start with a simple net profit as per books. We start with a simple net profit as per books of accounts. Now, ideally speaking, in Pgbp, it simply comes and says that you can start always from net profit as per books. Okay, but is it mandatory for you to start from net profit as per books? Not really. It can work in two ways. When you would have done your cash flow statement, you would have seen two ways of cash flow statement. One is called as indirect method, one is called as direct method. Indirect method is basically when you start from net profit. Direct method is when you start from revenue. Yes. In income tax, they have come and told that you have to start from indirect method, which means you should start from the net profit as per books. But ICA always has this challenge where they always sometimes also come and start from revenue also. Okay, so they may give you a question where they will start from revenue and they'll ask you to provide the deductions and exemptions. Either way works. You just have to be careful as to what items are already there and what items are not there. Okay, so you always start from net profit as per books of accounts. Then you did 2 pluses and you do 2 minuses. You do 2 pluses and then 2 minuses. What is 2 pluses, Rahul? 2 pluses are those items which are disallowances. We did know 4 words. Yes, that same items. So the first word is disallowances, already allowed. Disallowances what? Already allowed, which means the net profit which you have on the top already has a certain allowance which you are not supposed to claim. That will be disallowed. Second is called as deemed income. Where basically I am simply coming and saying that, Rahul, you never even had an income. Income tax is deemed an income for you. This is an additional item. This is your addition part. Next is less. Any kind of allowances not already claimed. Any kind of allowances not already claimed. I told you in your net profit you don't have certain items, but you are eligible for those items. You can go ahead and claim those items also. Yes, this is your allowance. Last item was reduction. Yes, last item was reduction. Reduction is basically income taxable in other heads. Last item is basically income taxable under other heads. This will arrive at your Pgbp. The first 2 items are plus, the next 2 items are minus. This will arrive at your Pgbp. You can find this as your Pgbp answer. Yes or no? Yes. A very simple straight cut format. Nothing complex about it. Yes. The challenge lies in each item itself. So this is a very cut to cut format. The challenge will lie in the same items. Okay. Now, if I have to put some wordings around it, Disallowances already allowed are basically covered in section 40 to 44. Okay, these are basically covered in section 40 to 44. The TDS defaults, the payments of cashes and all those things. It goes till 44. It goes till 44. 44 like there is 44A, 44DB and all those things. We will discuss as we go forward. 44 does not mean 44. Okay, it means 44 series. It means the 44 series. Okay, next, any kind of deemed income. Deemed income are actually covered under 41. The 40 to 44 la or item mattu remove pannom, which is 41. 41 is covered under deemed income. 41 is covered under deemed income. Next, any kind of allowances. Allowances are basically covered under 30 to 38. 30 to 38. They are basically coming and saying that Rahul, there are some expenses which you would have claimed or you have not claimed. I am giving you deduction. I am giving you a deduction, that is 30 to 38. And the last item is income taxable under other heads. There is no section for it. There is no section for it. Anyway, if you have an income not part of this, just remove it off. Just remove it off. These are your 3 items. These are your 3 items. Yes or no? Yes. This is your format. This is your format. Yes. Awesome. What we're going to do today is we're going to start in the same sequence. We're going to start in the same sequence. We're going to start from 30. We're going to start from 30 and go forward till 30, 44 and go forward till 44, where I will be simply coming and saying what is an item. You will tell me what happens in accounts. I will tell you what happens in income tax. Clear? Yes. So you will simply tell me what is happening in accounts. I will simply tell you what is happening in accounts. Beyond that, PGBP is pretty simple. Beyond that, PGBP is pretty simple. Starting from the first 30 to 38, the first items are 30 and 31. 30 and 31. 30 and 31 basically comes and talks about any kind of expenses you incur for 2 items. Any kind of expenses you incur for 2 items. One item is called as building. The other item is called as plant, machinery, furniture. What and all? Building, plant, machinery and furniture. Building is 30, plant, machinery and furniture is 31. Is 31. Yes. So income tax is coming and saying if you are going to incur some expenses relating to building, plant, machinery and furniture, I will tell you what to do. I will tell you what to do. What they will do, simple do accounts. Simple do accounts, which means they are going to ask you, Rahul, tell me what are the expenses which you are talking about. What are the expenses which you are talking about? I will tell you what will happen. I will tell you what will happen. Look at the items and tell me generally for these kind of items, what expenses will you incur? What expenses will you incur? First, very important thing for a building perspective, you will incur some rent. Yes or no? Yes. Now, in accounts, rent allowed, not allowed? Allowed. So, income tax also says allowed, no problem. Income tax also says allowed. They are saying, boss, if you are incurring a rent for a building, it is allowed as a deduction, no restriction. No restriction. In case you have done a sublease, meaning you are a person who's brought the building from someone and then give it off to someone and given it off to someone, net difference is your income. Net difference is your income. If it is the other way around, in that case also you have to take the difference. If you take the difference, in that case they are coming and saying, boss, what your expense will be is what you got from someone versus what you paid to someone, take the net difference, that is your rent expense. That is your rent expense. Straightforward, simple accounts. Simple accounts. Next. If you're talking about rent in building, in plant and machinery and furniture, it will be called as higher charges. Yes or no? Yes. Higher charges, allowed, not allowed? No restriction. Straightforward, allowed. Straightforward, allowed. Yes. Next, what other expenses can you incur? What other expenses can you incur? You are in a building, you have a building, you have taken the building on rent. On a daily basis or a monthly basis, you will incur something called as repairs and maintenance. Yes. So they came and said, Rahul, you will have something called as repairs. No, repairs will be for both. Repairs will be for both. Income tax is coming and saying, Rahul, what will you do in accounts? What will you do in accounts? I'm coming and saying repairs, I will charge it off to P&L. I'll charge it off to P&L. Income tax is saying, okay, go ahead and charge it off to P&L, which means allowed. Rahul, but I had a building completely in a bad condition, absolutely nothing is working in it. I had to undertake a big repair. The big repair is such a repair that the building has now become fresh new. You have incurred n number of expenses, very huge expenses you have incurred. Is it revenue repair or capital repair? It will become a capital repair because you have done a huge expense which is going to increase the economic life of the asset. Capital repairs in accounts, will you allow as deduction? No, you will capitalize. Income tax is saying you also capitalized. So which means if it is capital repairs, if it is capital repairs, you will capitalize. If it is a capital repairs, you will capitalize, which means if it is there in the P&L, you will remove it from P&L and then you will add it to the cost of the asset. If it is not there, you will leave it there itself. You will leave it there itself. Now the question which then came is, Rahul, if it is my building and I'm incurring current capital repairs, it's okay. Then it is added. Assuming it is not my building. Assuming it is not my building, I hired it from someone, but the building was in very bad condition. The building was in very bad condition. I have to incur huge expenses. In that case, can I capitalize, Rahul, when I don't even have a building? Can I capitalize when I don't even have a building? Yes, you can. Yes, you can. Income tax comes and says, even if you don't have a building, in your own name, but you have incurred a huge expense. Which is increasing the value of the asset. In that case, you will assume that you have a building. You will what? You will assume that you have a building and you will add it to that building. Which means building cost initially was 0. You will add an additional number. I'll give you a simple example. In the month of August, Pragya moved here. When we moved here, actually this complex was fully empty. You would have seen left and right, nothing is there. Everything is barren. Yes, this place was also fully barren. Yes, we just took this building on rent. But we realized that this building is not something which we can take classes on. So the whole team sat around. They created all these walls. They put all these tiles. They put all this infrastructure and everything. Yes. Now, when all these things were done, were these expenses incurred by us or were these expenses incurred by the building owner? It was incurred by us. Where it's normal expenses or high expenses? Capital repairs or current repairs? Capital repairs. Does Pragya have any building in her hand? No. Which means this will be capitalized as a deemed building. There is no restriction there. You will capitalize as a deemed building and allow it as a depreciation. Clear? Rahul, what other expenses can you incur? You can pay something called taxes. Yes, like for building, you will pay building taxes. For others, you can pay rate taxes and all those things. Taxes also allowed, no problem. This is indirect taxes, yes or no? This is indirect taxes, therefore allowed, no problem. But you have something called as 43B. When we go to 43B, we'll discuss. As of now, allowed. Yes or no? Yes. Let's read. It says, if you have the following expenses, you can claim it as a deduction under Pgbp. Rent is there now, you can claim rent as deduction. However, in case of subletting, only the net shall be allowed as deduction. Current repairs is undertaken whether by the tenant, owner, licensee, lease, mortgagor, it doesn't matter, everything is allowed as a deduction. Capital repairs will be allowed as a deduction to the, capital repairs will be capitalized to the books of accounts. Even if you are a tenant, you will deem a building. See in the bottom, it says the treatment of capital repairs shall be as follows. In case you are the owner of the property, you will add it to the block of the asset. In case you are not even the owner of the property, still you will assume a deemed acquisition of the building and add it to the cost of the asset. Yes or no? Next, any kind of other expenses, you will take expenses like land revenue, rates and taxes and all, insurance premium, everything can be allowed as a deduction by the person who's paying the money. Yes. This is what the section simply comes and says. Now, the reason what has happened is you have a building and you have a plant and machinery. Yes, this building which you had, actually this building you are using it for your personal purpose also, you are using it for office purpose also. You are using it for personal purpose also, you are using it for office purpose also. Basically, you are living in that house, but one part of the room you are conducting your office. In that case, Rahul, rent expenses will be fully allowed as deduction or will be partly allowed as deduction? It will be partly allowed as deduction. Income tax comes and says that if you have a building or a machinery, expenses for which are partly used for business and partly used for proportional, to the extent of personal you will disallow, balance you will allow. So assuming the question comes and says 20% is used for personal purpose, 80% is used for business purpose, what will you do? If you have an expense of 100, you will claim 80. If you have expenses of 100, you will disallow 20. Yes, this is a simple straightforward thing. Rahul, how does this 20 and 80 come? I say I will give you. In practical world, Rahul, does this 80, 20 and all work? It doesn't work. No one in the market can come and prove how much am I using for personal and how much can I using for business. Most of the people will come and say everything is business, or to be on a safer side, they'll say everything is personal. Practical world, it can never work out, but ICAI books, it is always permissible. ICAI books, it's always permissible. So you can make an assumption in ICAI books. Clear? Clear? Yes, this is what the question is. This is what the question is. Any doubts? No? Now, Rahul, what taxes am I talking about? What taxes am I talking about? Let's say you're talking about municipal taxes. What taxes? Municipal taxes. Now, if you have a vague memory of yesterday's class, we were discussing day before yesterday's class, we were discussing about IFHP, in which we were coming and saying any municipal taxes can be allowed as deduction by the owner only if it is paid. Yes or no? So what is happening is I am coming and saying, Rahul, I have municipal taxes. I am coming and saying I have municipal taxes. I will come and ask you a simple question. Tell me, what is this municipal taxes for? What is this municipal taxes for? It can be paid by two people. It can be paid by two people. One person is the owner. One person is the tenant. Yes or no? Yes. Now, I am the owner, Rahul. I am the owner, Rahul. What and all can I use this house for? What and all can I use this house for? I can use this house for my own living, which is SOP. I can use this house for my rent out, therefore LOP. I can use this house for business also. Yes or no? My own business I am using this house for. Hey, yes or no? Yes, yes. Now, question to you, Rahul. I have paid some municipal tax. I am living in my own house. I am living in my own house. Under which head am I talking about? This will go under which head? This will go under which head? House property. It will go under income from house property. In income from house property, is this allowed as a deduction? Not allowed as a deduction? Not allowed. Not allowed. Understand, SOP property, I told you till NAV level, nothing is allowed as deduction. Yes, because it is a personal expense. Coming to LOP, you are the owner of the property, you have let out the property for rent. You have let out the property for rent. Which head of income? Same, IFHP. In this IFHP, allowed, not allowed? Allowed. Only if it is, very good, only if it is paid by the owner, male potta, therefore it is paid only, but if it is, it is paid by owner only, but it is actually paid, I will allow. Coming to business, I have a house, in that house there is municipal taxes, I am using this house for my business, will be taxable under the head PGBP, Can you claim this tax, Rahul? Yes, allowed. Yes, that is what we learned right now. You can claim it as a deduction. Under what section, Rahul? You will claim it under 30 and 31. I told you it is allowed as deduction subject to 43B. What does 43B come and say, Rahul, from intersyllabus? Intersyllabus 43B come and said that if you have any kind of expenses, you have time until the due date of filing the return. If you make the payment by the due date of filing the return, you can claim it as a deduction. Otherwise, you will get no deduction. So here, understand, in house property, I came and told you, you can claim only in the year of payment. But when it comes to PGBP, I am not giving you the time until payment. I am giving additional time until return filing. So I am saying allowed if paid up to ROI return. Allowed if paid up to ROI return. On the left side, I am saying allow if paid in previous year. If it is allowed, if it is paid under the previous year. Yes, understand the difference. If you are in HP, it is still previous year. If you are in PGBP, it is still due date of return filing. Yes or no? Why I am telling you this is because if you remember the golden rules which we did, yes, where I told you classify the income into the right head of income. This is what is important. Okay. Understand, if you were classifying this under HP, you would have got the deduction only till the previous year. But if you are classifying this under PGBP, you will get the deduction up to ROI filing. So your classification is important. Yes or no? Come to the other side. You are now a tenant. Rahul, tenant will use this house for what and all reasons? He will use it for his own self-occupied property. Then he can use it for his own business. He can use it for his own business. Third thing, what can he use his property for? He can use it for subletting. Yes or no? He can use it for subletting. SOP, what will happen? Hey Rahul, I am not the owner of property. I have paid the money and I am using it for my self occupation. Allowed? Not allowed? Not allowed. Why Rahul? Because you are neither under IFHP, you are neither under PGBP. You are neither under IFHP, neither under PGBP. Coming to business. I have paid some taxes. I am the tenant of the property. Allowed? Not allowed? I am under PGBP. The moment it comes under business, it is under PGBP. Am I allowed? Not allowed, Rahul? I am again allowed. Up to what date? Up to ROI filing. Yes, because it is still business. I have never came and asked you that you should be the owner. I only simply said you have to make the payment. If you are making the payment by ROI filing, you are allowed. Coming to subletting. In subletting, you have to ask yourself two things. Are you in the business of subletting or are you not in the business of subletting? If this is your primary business, it goes under PGBP. If it goes under PGBP, allowed? Not allowed? Again, allowed. Up to what date? Up to ROI filing. Rahul, subletting, not my business. Hey, are you the owner? No, you're not the owner, which means can you tax it under IFHP? No. It is not even your business, so can you tax it under PGBP? No. Which means the only garbage section you have is IFOS. Rahul, in IFOS, what will happen? Again, allowed. No conditions attached. IFOS has no conditions, no 43B, no payment basis, which means it is allowed in the year of incurrence. Rahul, I have not even made the payment. It's okay. It is okay. It is fully allowed. There is no restriction anywhere. So it is allowed on incurrence basis. Yes or no? Yes. This is a simple summary chart for you. For your municipal taxes. See it once. Let me know if you understand. Okay, as such, it is not relevant from exam perspective now, but it's good to know. The moment you start expanding your horizon and you start looking at one item from every head of income, your answering skills become better. Tomorrow, if any question gets thrown up to you, you know which head to look at. Okay, that is why I'm doing this. Otherwise, it is not relevant from exam perspective. Okay, check it quickly and tell me if you understand. Yeah, possible, no? See, if you are living in the property, ideally speaking, what will happen, Ritania, is that municipal taxes is not something which you go to a place and pay. Okay, generally, what I've noticed is municipal tax is something where what will happen is the authority is there, no? The authority will suddenly one day come to your home and come and say, today is the due date for paying municipal taxes, so pay it off. Okay, now at that point of time in the house, who will be staying, the owner or the tenant? So who will pay the money? That's all is the answer. Clear? Shall we go forward? Yes, this was your 30 and 31. A simple statement, you don't have to remember it from exam perspective. Just remember that if it is capital repairs, you will add it to the cost of the asset. If it is current repairs, you will claim it as reduction. Yes, great. Moving forward to the next important section from exam perspective. Please mark it as important also. You are talking about depreciation. We're talking about depreciation. Yes. What is depreciation, Rahul? What is depreciation according to you people? What do you think means by depreciation? Renting, huh? Writing off an asset. Writing off an asset over a because okay. You would have learned it in accounts, right? Where they come and say that depreciation is where you are writing off an asset because of wear and tear, technical obsolescence, passage of time. Then what else? Yes, I'm going to ask you simple questions. Tell me if it makes sense. Tell me if it is making sense. Yes, you told me depreciation is the wear and tear or the writing off of an asset due to wear and tear. Yes, I'm giving you an example. I'm giving an example. Basically, what happened is I am a company. I today bought a furniture. Very nice furniture. Pakka 1 lakh rupees I spent on the furniture, and I bought it and kept it in my office. Unfortunately, what happened is the furniture was very nice. But my office is not ready yet. Because of which, what happened is I could not install the furniture. So what I did is I bubble wrapped the furniture so that it doesn't get dirty, and I kept it at my home. I thought that my office will get ready in 6 months, so I will use it after that. But unfortunately, what happened? COVID hit, everything stopped. For 2 years, I could not use the building, which means I could not use the furniture also. Furniture is still at my home, full bubble wrapped, pakka new irukku. Yes, question to you. Will you charge depreciation on that furniture? Not charge depreciation on the furniture. Accounts solra, income tax solra. Accounts, will you charge depreciation? Not charge depreciation. We will charge. Why will you charge? Because accounts say that depreciation should be charged from the date on which the asset is ready to use. Yes or no? Is the furniture ready to use? Yes. But have you used it? No. Has the asset wore and tore? Or is it brand new? It is brand new, but you are charging. How is that? Nidana sonna, depreciation means you have to do a wear and tear. Where is the wear and tear in the depreciation? Yes. Question number 1. Question number 2. What other words did you use? Technical obsolescence. You told me that basically a product has become obsolete, so you stopped using it. I'll give you a simple example. Yes, you have a laptop. You bought the laptop 2 years back. Okay, assume that time Windows 10 was working in the laptop. Now, Microsoft has decided they will launch Windows 21. Okay, new laptop, Windows 21. Old laptop, Windows 10 is there. New laptop, Windows 21 is there. It is there in the market. Tomorrow, just because Windows 21 came, you will throw your laptop and come and say, I'm not going to use anymore because it is obsolete. Or will you still use the asset? Will you still use the asset? Which means whether the new Windows 21 came or not, your asset is still being used. You are still being charging depreciation. Does technical obsolescence has anything to do with your depreciation? No. What was the next thing? Passage of time. So which means as your time gets increased, you are charging depreciation. Yes or no? Yes. I'll ask you a simple question. You are living in a building. You bought the building 50 years back. That time building was costing 1 lakh, 2 lakh rupees. Okay, that time building was costing 1 lakh or 2 lakh rupees 50 years back. Today, when you plan to sell the building will be sold for same 1 lakh, 2 lakh, lesser than 1 lakh, 2 lakh, or more than 1 lakh, 2 lakh? It will be more. Yes, people today will buy your building for 1 crore, 2 crore also. Yes, passage of time nale money has decreased or money has increased? What the depreciation did you do here? What depreciation have you done then? Yes or no? Yes. You learned these fancy words in accounts where they come and say wear and tear, passage of time, technical obsolescence. Adanala naanga depreciation pannittu irukom. Which of those rules have actually you applied when you did depreciations? Have you ever come and looked at your asset, looked at whether it is obsolete or not, looked at whether it is passage of time, or looked at whether it is wore and tore before you charge depreciation? At best, I can give you an example. Earlier and all, you had this CD system and all, music system, la CD irukom. Now everything is working on pen drive. Yes. Now the moment you had a CD system, the CD stopped working. Everyone started moving to pen drives. That became obsolescence. After it became obsolete, did you write off the asset that day, or did you write it off over the years again? You wrote it off that same day itself, because you told after this it's not going to be work. Hey, was there depreciation or was there impairment? Did you do depreciation or did you do impairment? You did impairment there. You came and said, boss, asset is not worthful anymore itself. Today itself, asset is stopped working because inimala I cannot use the asset. Did you wait for depreciation to happen over the years, or did you charge it off right away? You charged it off right away. Does depreciation have anything to do with the passage of time, or your technical obsolescence, or your wear and tear? Fancy words accounts have just to justify their position. At the end of the day, nothing makes sense. If I have to put very shrewdly to you, what is depreciation, Rahul? Depreciation is basically an expense which you claimed in the past. But the expense was so huge that you could not put it in a single year. Think about it. Did you incur an expense? Yes, you incurred that 1 lakh for building. This building you're going to use for business or personal? You're going to use it for business. Yes. Now, why did you pay this 1 lakh rupees? Because you want to use this building for generating your revenue. Now, this revenue will come in 1 year or multiple years? It will come in multiple years. Now, assume a scenario, you are in 1980. You made a payment of building for 1 lakh. That time 1 lakh was big number, small number? It was big number, which means the moment you made that payment of 1 lakh, if you would have charged it to P&L, that year P&L will have shown a loss or a profit? Would have shown a loss. Next year, would you have claimed anything? No, because building fully gone. Next year only profits are there. Next year will show profit. Third year will show profit. Fourth year you again bought a new building. You will again charge off everything. Again fourth year will show loss. Do you see consistency? No. Suddenly, just because 1 year you are buying building, that year it's becoming losses, other years it's doing profits. Yes or no? It is very difficult for shareholders to make a decision based in this. Because shareholders will come and say, 1 year you're making loss, I don't want to invest. Next year you're making profits, I want to invest. Then you're again making losses, I want to take away. Hey, in the left and right you cannot do. So therefore they came and said, Rahul, it is not possible for me to charge the whole building in one single year. Because if I end up charging the building in one single year, what will happen? My business will not be consistent. I will not be able to show consistent profits. Yes or no? So therefore they came and said, let's bring this concept of depreciation, where depreciation is nothing but you have incurred a huge expense. Since you cannot put it in 1 year of P&L, you are putting it over multiple years of P&L. That is why if you realize, even though building has become 50 crores in the current year, you paid only 1 crore and you are charging only depreciation on 1 crore. Yes or no? Even though building has become 50 crores in market, you are still charging depreciation on only 1 crore because you paid an expense of only 1 crore. Yes or no? If you have paid an expense of only 1 crore, you will like to claim the expense of only 1 crore over the years. So you are still charging depreciation only on 1 crore. It doesn't matter whether the building is showing 50 crores. Yes or no? Yes, understand. No, your passage of time has nothing to do. Your wear and tear has nothing to do. Your obsolescence has nothing to do. It is all about what you paid. And you are eligible. Just that you cannot claim it in 1 year, so I am allowing it over multiple years. So depreciation, if I have to put it in very simple English, it is write-off of a capex. What is capex? Capital expenditure. It is write-off of a capital expenditure over the years to portray consistency of profits. Yes or no? Yes. This is what is an actual meaning of depreciation as against what your accounts meaning says. This is what is your actual depreciation meaning. You are simply incurring an expense, trying to write it off over the years. Because you have some huge expense you cannot put in the single year, so you are allowing it over multiple years in order to maintain consistency. Clear, everyone? Yes, this is what I feel is the right definition of depreciation. This is how you should talk about. Wear and tear, obsolescence and all is all fancy words. Nothing is right. You can probably use this to go and convey your clients to get more business, but practically you should know that this is not the answer. Clear till here? Yes, this is what a depreciation means. Now, since I am doing depreciation of income tax, I am going to tell you some rules. For me, rule number 1 itself is depreciation as per accounts is wrong. For me, there is one big rule which I follow. For me, depreciation as per accounts is wrong. I don't care. I feel accounts does not know depreciation. So I will not look at depreciation of accounts. Which means that will be fully, very good, disallowed. That will be fully disallowed. Income tax and accounts have their own ego clash. Income tax will say accounts is wrong. Accounts will say income tax is wrong. Right now you are studying with me income tax. So for me, accounts is wrong. For me, accounts is wrong. Yes, so rule number 1, depreciation as per accounts is wrong. Fully disallowed. Fully disallowed. This is the rule number 1. This is the rule number 1. Rule number 2. Rahul, I want to claim depreciation. I want to claim depreciation. Yes, for you to claim depreciation, there are certain things you should have in mind. There are certain things you should have in mind. In depreciation, you should claim depreciation on what? Asset. So rule should be, there should be an asset. Very good. There should be an asset. Rule number 3. What and all do you need? You should have an asset for which you should claim depreciation. If you want to claim depreciation, asset should be in your name or someone else's name? Should be your name. Asset should be owned by you. Yes or no? Yes or no? Yes, so 2 rules I am coming and telling you. Rule number 1, there should be an asset. Asset should be in your name. There should be an asset and asset should be in your name. Rule number 3. Rule number 3. What do you need? If I want to claim depreciation on something, I need to first have an asset. I need to capitalize the asset. I need to charge depreciation on it. Yes or no? Yes or no? Yes. When will I start charging depreciation, Rahul? I will start charging depreciation in accounts from the date on which the asset is ready to use. Income tax is saying, boss, ready to use now, you can bring an asset and keep it with yourself. Bring an asset and keep it with yourself. You will keep buying assets, keep it in your storeroom, and you will come and say depreciation. I don't want that. I will say depreciation will claim from it is first put to use. It is what? First put to use. It is not directly put to use, it is first put to use. Rahul, what do you mean by first put to use? I'll give you an example. Let's assume that you bought a furniture. You bought the furniture, you paid 1 crore for it and you kept it in your office. One day you start on the furniture. Next day when you are sitting on the furniture, the wheels broke. Furniture is gone for repairs, not gone for repairs. Furniture is gone for repairs. Yes or no? Yes. Now furniture is gone for repairs. For the next 3 months, furniture did not come back to you because furniture is being repaired. 3 months later, furniture comes back to you. Yes. So you technically use the asset for 1 day before 3 months, and then from 4th month you are using it. Question to you: depreciation will be charged for that year for the whole 12 months, or will it be charged only for 9 months and 1 day? It will be charged for the whole year. Why will it be charged for the whole year? Because I am not bothered about how much did you use the asset. I am bothered about when did you put the asset to use. Which means the date on which you first put to use, that becomes your date. That's all. After this, if you don't use the asset also, I am not bothered. I will let you take a depreciation. One very big example, a very fancy example which came in the exam once. Okay. If you remember, some time back, about 5-6 years back, Mr. Arvind Kejriwal had introduced this odd even concept in Delhi. Is there someone aware about what is odd even concept? Any idea? No. Odd even concept basically was introduced when Delhi was having big pollution. Where Arvind Kejriwal came and said, on Monday, Wednesdays, Fridays and Sundays, the car which has an even number plate in the end, the car number plate irukla, and the number plate if it is an even number in the end, you can drive your car on Monday, Wednesday, Fridays and Sundays. If you have a odd number on the last, then you can drive it on Tuesday, Thursday, Saturdays and Sundays. Which means if you have an even number plate, you cannot drive it on Tuesdays, Thursdays and Saturdays. If you have an odd number plate, you cannot drive it on Monday, Wednesdays and Fridays. Yes, it was brought in because they wanted to reduce pollution. ICA asked a question once. The question came and said, I am a person who owns a car. Because of Delhi rules, I am now using my asset only for Monday, Wednesday and Friday. And I am not able to use my asset on Tuesday, Thursdays and Saturdays, which technically means that in the whole year, I use the asset only for half the year. For the whole year, I use the asset only for half the year, because over weekly, half the week only I am able to use. Question in ICA came and said, should the depreciation be charged for the whole year or should the depreciation be charged for half a year? Should it be for whole year or half a year? Should be for whole year. Why, Rahul? I am not bothered about how much days I put the asset to use. I am bothered about when the asset was first put to use. The moment on the first Monday you put the asset to use, it is assumed that it is put to use forever. It is assumed that it is put to use forever. After this, I will not sit and bother about which day you put to use, which day you did not put to use. Why, Rahul, are you not bothering? Because please understand, tomorrow if you want to claim depreciation, both two people should know about this. One is the assessee and one is the assessing officer. Yes. Now, how many days you did not put to use? Do you know? Do you think assessing officer will know? Do you think assessing officer will know? Do you think he's sitting in your office every day? He'll come to your office and check whether you put the asset to use or not put the asset to use? No. He will trust you only. Correct or not? And if you have come and said that, sir, I put it to use, then it is put to use. If you say it is not put to use, it is not put to use. Can assessing officer vouch and verify? Practically, do you think officer will be able to verify? No. If he's not even able to going to verify, do you think it's sensible for you to split it into half and say, no? They said, boss, let's not get into the complication itself because assessing officer may not be able to verify. So let's assume it as first put to use. Clear? Yes. So this is rule number 4, where they are saying depreciation claim should be from the date on which the asset is first put to use. Clear, everyone? Yes. Any doubts? No. I'll ask you a question. What happened is, I was working in my company. I had to buy some assets. Okay, so I bought some machinery, building, and all those things I bought. Okay, along with that, I also bought one item called as fire extinguisher. What item? Fire extinguisher. I bought an item called as fire extinguisher. I put it in my building. In case there is a fire. Yes. Now what happened is, fire extinguisher is also my asset. So therefore, I capitalized it and I claimed depreciation. Assessing officer came to my premises. He saw my fire extinguisher. He opened my books, saw that I claimed a depreciation. He disallowed the whole depreciation. I went to him and I said, sir, why did you disallow my depreciation? I claimed properly only. No, sir. I am the owner. I have the asset. I have done it as per income tax also. What is the problem? He said, Rahul, you have satisfied first 3 conditions. You have satisfied first 3 conditions. You have not satisfied the 4th condition. I did not understand. I asked him, sir, please elaborate. He said, Rahul, when I came to your premises, I saw there is a fire extinguisher there on the building. And it is a brand new fire extinguisher. You have not even touched it. Which means you have not even put to use. When you have not even put to use, how do you think I should claim your depreciation? Now I am feeling bad. Because I did right only. I feel I have done right. So what we did, we both went to court. I went to my high court and I came and said, dear high court, assessing officer is saying I am not eligible to claim depreciation on fire extinguisher. Assessing officer says, yes, sir. Actually, act comes and says first to put to use. He is not put to use the asset, sir. So I cannot give him depreciation. I could ask the simple question. Dear assessing officer, for my assessee to claim this depreciation, what do you want him to do? Assessing officer said, nothing, sir. I want him to put the asset to use. High court came and said, dear assessing officer, if you want him to put the asset to use, do you want him to burn his building? Do you want my assessee to go and burn his building and then use the extinguisher? He said, no, sir, that is not the idea. Then he said, then how do you expect him to use the asset? Fire extinguisher is created because they want to save fire. It is not because I want to light fire. Yes or no? Now, do you want the assessee to wait until the house is put on fire? Or are you okay with him having a safety measure? Assessing officer said, yes, sir, I am okay with him having a safety measure. Then he said, then how can you deny him the depreciation? Yes. High court came and decided that, sir, just because I say the word put to use does not mean you actually have to put to use. There are some equipments which are safety measures. Example, fire extinguisher. Second example, machinery spare. You have a spare machinery. Okay. In your factory, you only need 2 machineries, but you have also had a third machinery on the back. In case one of those 2 stop working, I should not stop my business. So I will start using this. I will start using this. This machinery will only be used after they stop working. Will I touch the machinery till then? No. So income tax is coming and saying, Rahul, put to use means put to use. But High Court came and said put to use does not necessarily mean put to use if you have any passive use assets. What assets? Passive use assets. Passive use assets are those assets which are kept ready for active use, like fire extinguisher, machinery spares and all those things. These kind of assets, don't expect the asset to be put to use. It is enough if the asset is kept ready to use. It is enough if the asset is kept ready to use, in which case you can claim depreciation right from the day on which the asset is ready to use. Purida? Yes. So exception says any kind of passive use assets. What assets? Passive use assets. You can claim this asset from the date on which the asset is ready to use. You can claim the asset from the date on which the asset is ready to use. Clear? Yes, this is what your 4 golden rules are. With the 5th golden rules comes and says depreciation under Income Tax Act. Depreciation under Income Tax Act cannot be claimed for Hey, tell me, you have assets in your books. Which asset do you think cannot be depreciated? Land. So you cannot claim depreciation on land. Yes. So income tax comes and says you have depreciation to claim. Don't worry, claim it off, but don't claim depreciation on land, because land can never depreciate. Land can only appreciate. So you cannot claim depreciation on land. You can only claim depreciation on other assets, along with one more item called as goodwill. Income tax comes and says when you have any kind of item in your books called as goodwill, that also is not eligible for depreciation. Since we have started this topic, let's understand what do you mean by goodwill. What have you learned in accounts? What is goodwill in accounts? What is goodwill in accounts? I don't remember exactly the definition, but something goes around an asset which is created for the purpose of brand value, customer satisfaction, loyalty, something like that. Yes, you are making a payment for acquiring customer satisfaction, loyalty, brand value, this value, that value, and no nonsense will talk. That nonsense will come up and ask you. Question to you: where and all have you seen depreciation, goodwill in your accounts? Okay, one place in partnership accounts. In partnership, where have you seen, ma? Right. Okay. Question to you: when you did your admission of retirement or goodwill, in accounts of partnership, did you ever recognize goodwill, or did you just do a cross charge between partners? Did you ever recognize the goodwill in your books? Did you ever pass an entry called goodwill asset account debit to capital account, or did you just do a capital transfer where you did sacrificing partners ratio account debit to gaining partners ratio account? You did a cross charge. You never recognized the goodwill. Yes. So actually speaking, that is an internally agreed goodwill, but it is not there in the books. If it is not even there in the books, will I claim depreciation? No. I need a goodwill in my books. I am talking about cases where there is a goodwill in the books. I'm talking about a case where there is a goodwill in the books. Tell me those cases where you have recognized the goodwill in the books. Very good. One scenario I remember is amalgamation of companies. Yes, where you have decided to buy someone else's company. Two methods are there. One is called as merger method. One is called as acquisition method. Purchase or acquisition method. Which of the methods you will charge goodwill, ma? Will you do goodwill in merger method or acquisition method, or both? You will do it only in acquisition method. You won't do it in merger method. Yes. At the same time, I think you would have seen it in one more place. It's called as consolidation of accounts. Consolidated financial statements. Angyo, you do consolidation, like you do goodwill or capital reserve. Yes or no? Yes. Now, if you realize and understand carefully, the goodwill which you're talking about right now came in amalgamation, did not come in partnership and all. Yes, which means the goodwill which you're talking about is a scenario where you have paid more money to your other person to acquire his business, Understand, in partnership also you did it. You recognize goodwill, but you never recognized in your books. Because understand, the goodwill was of your own business. Where basically what happened is they came and said, Rahul, there is a person called A, there is a person called B, there is a person called C. C is planning to join the firm. For which A and B are coming and saying that my business is valued at this, so you pay me compensation. Hey, who decided goodwill? A and B. Yes or no? A and B decided goodwill based on market conditions or based on their estimations? Based on their estimations. Think about it. No? Today I am starting a startup. The first thing which I will do when I start a startup is I'll come and say, this startup is going to be so rich that tomorrow I will surpass Apple. That is how you'll start. No. Will you ever come and start a startup saying that no, I will incur losses? No. You'll always start a startup saying, I want to become the biggest player in the market. Tomorrow I should become Apple. So today you are standing your startup and you're saying, boss, I am going to become as rich as Apple. Which means today you can recognize goodwill in your book coming and saying, my current net worth is 1 crore. Apple's net worth is 5,000 crores, which means I can recognize goodwill of 4,900 crores. Yes or no? Possible, not possible? Possible. It's my goodwill. I can do whatever I want. But does that goodwill make sense? No. That is why in partnership accounts, they don't let you recognize the goodwill, because they come and say, boss, this goodwill is what you and I agreed. It may not be the true value. Don't Suma inflate your books. Go cross charge and get it back. Yes or no? Yes. Opposite scenario is amalgamation. In a case of amalgamation, you are buying someone's buildings and assets. There you are recognizing goodwill. Because understand, there goodwill is not something which you decided. Goodwill is something which I decided. I am the purchaser. What do I mean, Rahul? In simple words, you would have seen this comedy. Where you have this jeans. When you go and you take the jeans from a local kada, it will charge you 500 rupees. You take the jeans from some store, it will charge 1,200 rupees. You take this jeans to Zara, you take this jeans to Zara. Zara will say it is 4,000 rupees. You take the jeans to H&M will say 10,000 rupees. Hey, jeans is the same. One person is charging 500, one person is charging 1,000, one person is charging 3,000, one person is charging 10,000. Yes or no? The value of the jeans has changed from person to person, which means the brand is carrying its own value. The value changes from one person to second person. Yes or no? Think about it. You would have seen this local kada and all, where they'll come and say, sir, this is Zara jeans, but I'm selling it for 1,000 rupees. Where they'll say, sir, Zara order jeans branded product, but I'm selling it for 1,000 rupees. Ide jeans, if you go to Zara actual showroom, they'll sell it for 10,000 rupees. A same Zara in one place has become 1,000 and same one place has become 10,000. Why is it there? Because the person who's selling it has given a different impression towards it. Yes or no? Yes, the person selling it itself has given a different impression. This person, when he's selling, I will bargain for 1,000. That person, when he's there, I will not bargain. I will pay him 10,000. Yes or no? So, goodwill is being decided not by the person who's selling the product. It is being decided by the person who is buying the product. Yes or no? So, today I am planning to buy your company. You may say that you want 1,000 crores. I will say, I will not give you 1,000 crores. I will give you only 600 crores. Yes or no? Because for me, your value is 600 crores. Yes or no? For me, your value is 600 crores. You may say your value is 1,000 crores. You may say your value is 10,000 crores also. Will I pay 10,000 crores for that? No. I will only pay you what I feel is your value. Yes or no? Yes. Now, you are the seller. You are doing an open market bid. I said it is 500 crores. Someone else may say 600 crores. Someone else may say 700 crores. Yes or no? Yes. So, for every person who is making a decision to buy you, the value is increasing or decreasing, which means at any point of time, can goodwill be estimated reliably? No, because Every person has their own impression of goodwill. Yes or no? Yes or no? You can come to me and I can come and tell you your business is worth 500 crores. He can say the business is worth 600 crores. That person can say business is worth 700 crores. A basis that, will you start inflating your books and showing 700 crores? Will you start showing 700 crores? No. You will come and say, Rahul, to whomever I decide to sell, that will become my goodwill. Yes, you can make a decision to sell to the 500 crores guy and not to sell to 700 crores guy, because the 500 crores is more reliable too. Yes or no? Today you know that the 500 crores guy will pay you the money. So will you decide to sell to 500 crores guy or 700 crores guy? You will decide to sell it to 500 crores guy. So for me and you, value has become 500 crores, final arch. Yes or no? So for you, goodwill is only 500 crores. Yes or no? Yes or no? Understand, goodwill is not a right asset. Goodwill is not a right asset. Goodwill is just an extra money paid depending on the value of the asset. Depending on the value of the asset. Now, understand, 500 crores when I gave you. 500 crores when I gave you only for your brand name, or I gave you for your assets also? I gave you for your assets also. Yes. Now, tomorrow you are coming and saying, Rahul, in my business, my assets are worth 30 crores. My assets are worth 30 crores. But I'm still ready to pay you 500 crores. I'm still ready to pay you 500 crores. Not because the assets is worth 30 crores. It's because your brand name carries a value. Your brand name carries a value. For that, I'm ready to pay you 500 crores. Yes. In that 500 crores, 30 crores is your asset, which you know. Which means balance will become your goodwill. Balance will become your goodwill. In simple words, if I have to come and tell you, Rahul, goodwill is not valued. Goodwill is not valued. Goodwill is a balancing figure. Goodwill is a balancing figure. Whatever price you pay vis-a-vis whatever is the asset cost will become your goodwill. Will become your goodwill. Yes or no? Yes, that is what you would have done in amalgamation also. If you think amalgamation, what you did, you told the net assets of the company is 100 crores. I have paid 600 crores. Purchase consideration is 600 crores. Net assets is 100 crores. Therefore, 500 crores is goodwill. Yes or no? If someone else would have bought a purchase consideration for 1000 crores, you would have said 900 crores. Yes or no? So purchase consideration is deciding your goodwill based on a balancing figure model. Based on a balancing figure model. Yes or no? Yes or no? Yes. So all these fancy words which you use, where you come and say goodwill is the customer satisfaction, loyalty, this asset, that asset, nothing is right. Nothing is right. Goodwill is simply put a balancing figure of the purchase consideration vis-a-vis your cost of the asset. Vis-a-vis your cost of the asset. Yes or no? Yes or no? Now, this is the simple idea which happened. This is the simple idea which happened. What happened is, I made a purchase of a business. I made a purchase of a business where I paid 500 crores. Assets were worth 100 crores. So I recognize 400 crores as goodwill. I recognize 400 crores as goodwill. And in my income tax, I claimed depreciation. I claimed depreciation. Assessing officer was like me. He said, Rahul, why this 400 crores is recognized? Why this 400 crores is recognized? The other person said, sir, accounts comes and says this is brand value, customer loyalty, this value, that value and all. Yes. I as an income tax officer came and asked, how did you value? How did you value? He said, sir, I paid 500 crores, assets were worth 100 crores, so therefore 400 crores. 400 crores. I came and said, why did you pay 500 crores? Why did you pay 500 crores? Do you have an evidence to pay 500 crores, or you summa paid 500 crores? You summa paid 500 crores. I said, sir, nothing, sir. Summa paid 500 crores. Summa paid 500 crores because we both negotiated. We said 500 crores. We said 500 crores. He said, Rahul, then this 500 crores and the 100 crores difference, 400 crores is not your money paid for brand. It's not the money paid for brand. It is basically you did not negotiate properly. You did not negotiate properly. You should have negotiated for 100 crores. You negotiated for only 500 crores. Technically, this is a loss on purchase of business. This is a loss on purchase of business. If it is a loss on purchase of business, there is nothing asset in it. There is no asset in it. Tomorrow you cannot go and sell this brand. Yes or no? Will you be able to sell a brand to someone, come and say, I paid 470 crores for this brand. You buy it from me for 470 crores. No one will buy. People are not bothered about your brand. People are bothered about your business. Yes or no? So assessing officer came and said, boss, goodwill and all is not asset. This is summa write-off of a loss. This is summa write-off of a loss. He disallowed the whole depreciation. He disallowed the whole depreciation. Assessing officer disallowed the depreciation. Assessee claimed depreciation. Both are not happy. We will go to courts. We will go to courts. This went to a court called as Supreme Court. This went to a court called as Supreme Court in the case of a very famous decision called as Smith Securities. SMIF. Smith Securities, where assessee went and said, dear Supreme Court, please understand, I have paid 500 crores for the business purchase, where he gave me assets of only 100 crores. I paid him extra 400 crores because he has a brand value. He has a brand value. I have recognized this brand value as goodwill and I want depreciation on it. I want depreciation on it. Assessing officer said, no, sir, this is a loss, no depreciation on it. No depreciation on it. Supreme Court came and said, forget assessing officer. What you have done is right. What you have done is right. Goodwill is a asset. Goodwill is an asset. You are eligible to claim depreciation. You are eligible to claim depreciation. This was the decision of Supreme Court. This was the decision of Supreme Court. Now, income tax department will be happy, not happy. Income tax department will be happy, not happy. They'll be not happy. They lost a depreciation. They lost depreciation. Their taxes come down. Their taxes come down. So what happened is assessing officer started playing smarter. Next year, when they started claiming depreciation, no, assessing officer said, you are telling me this 400 crores is brand value. You are telling me this 400 crores is brand value. Tell me out of this 400 crores, how much is the brand value? How much is the brand value? Prove me the number. Prove me the number. Don't tell me this is balancing figure. I don't want a balancing figure. Prove me that this 400 crores is brand value. Give me proof. Give me proof. Because for asset you need proof. No. Give me proof. Give me proof. I said, sir, there is no proof and all. This is balancing figure. This is balancing figure. He said, Rahul, if it is balancing figure, there is no brand value. There is no brand value. Goodwill can be depreciated. But I will say goodwill is 0. So depreciation will become 0. Yes. So assessing officer said, Supreme Court told goodwill is an asset. I am also agreeing goodwill is an asset. But Supreme Court never told how to value asset. Supreme Court did not tell how to value asset. So I valued asset at 0. I valued asset at 0. So what happened? Even though Supreme Court said depreciation is allowable, assessing officers were not giving depreciation. Assessing officers were not giving depreciation. We got very angry. We said, sir, Supreme Court level ko poite vaangino decision. After that also you are not permitting. After that also you are not permitting. Something is wrong with you. Something is wrong with you. We again went to courts. And we came and said, dear sir, Smith Security says goodwill is an asset. Assessing officer is saying asset is 0. Asset is 0. Tell me how to value. Tell me how to value. Many high courts came and said, Rahul, what value you did is right. What value you did is right. It is the purchase consideration paid minus the net assets. Minus the net assets. Yes or no? Yes or no? Yes. So they said purchase consideration minus net assets. What you have done is right. What you have done is right. What you valued is correct. What you valued is correct. Assessing officer said, Rahul, okay. Rahul, okay. Next year, again they denied depreciation. Again they denied depreciation because they came and said, Rahul, you said purchase consideration minus asset value. Minus asset value. He came and asked me, Rahul, what asset value did you take? What asset value did you take? I said, sir, I took the purchase price of the asset. I took the purchase price of the asset. I had purchased the business from him, so I had valued the asset. I had valued the asset. Assessing officer came and said, why did you take the purchase price? That purchase price is as per accounts. That purchase price is as per accounts. I am in income tax. I am in income tax. I know how to value asset as per my act. As per my act. I know what is the depreciation and WDV of that asset. You should have done the goodwill basis income tax WDV. You should have done the asset basis income tax WDV, not your purchase price. Not your purchase price, because that makes no sense. That makes no sense. So you have wrongly valued your asset, therefore depreciation is 0. Therefore depreciation is 0. We got fed up. We got fed up. Every stage we got a favorable decision. Now courts are not allowing. Now courts are not, now assessing officer is not allowing. We directly approached the income tax department. Highest authority, CBDT. We told CBDT, dear CBDT, Supreme Court said goodwill is allowed. High Court is saying goodwill can be valued basis purchase consideration minus net assets. I also know that I have done goodwill valuation basis a certain purchase price. Still your assessing officers are not helping me. Something is wrong, sir. Something is wrong. Help me out. Help me out. If you want, we will talk to Nirmala Sitharaman. CBDT said, let's do one thing. Let's both go together and talk to Nirmala Sitharaman. We both went and said, dear sir, I want a depreciation. Who am I? I am the assessee. CBDT was my friend some time back. Immediately before Nirmala Sitharaman, he jumped and he said, no, sir, don't give depreciation. I am not in favor of assessee. I don't feel this is an asset. Help me out, because courts are not allowing in my favor. Nirmala Sitharaman will permit assessee, assessing officer. Assessing officer. Nirmala Sitharaman passed a decision 2 years back where she came and said, going forward, depreciation cannot be claimed on goodwill. Depreciation cannot be claimed on goodwill. Now goodwill has just become an asset in your books. It has just become an asset in your books. Can you claim depreciation? No. What will happen? Directly sell it off and claim capital gains. Directly sell it off and claim capital gains in the future, but you are not permitted to claim depreciation. You're not permitted to claim depreciation. This is the whole background story. This is the whole background story. Why depreciation is not permitted on goodwill. Why depreciation is not permitted on goodwill. Makes sense? Doesn't make sense? Yes. My point when I try to tell you this is because understand when you create a law, there is always loopholes. There is always loopholes. You can always play with loopholes. Yes. Assessing officer also finds the same loopholes to get more taxes from you. To get more taxes from you. At the end of the day, both will get tired and reach legislature body. Both will get tired and reach legislature body. Legislature body will give it in one of those favors. One of those favors. These are all those cases. These are all those cases. So as you keep reading law, please understand laws are dynamic. Laws are dynamic. What you read today may not be applicable tomorrow. Yes, some time back depreciation was allowed on goodwill. Now depreciation is not allowed on goodwill. Things have changed. Things have changed. Clear? Clear? All clear? Story is fine? Yes, this is what your story is. This is what your story is. What are the background of depreciation? You can claim depreciation as per income tax. You can claim depreciation only if you have an asset. You should be the owner of the asset. Depreciation can be claimed from the date on which the asset is first put to use. Depreciation cannot be claimed on land and goodwill. Depreciation cannot be claimed on land and goodwill. With me till here? Yes. Now, after you are doing depreciation, I now want to do depreciation. Which means I need to do certain things. I need to have an asset. I should be the owner of the asset. I need to put the asset to use. All conditions satisfied. Now I want to claim depreciation. I need to know certain things. First thing I need to know is what method should I employ. Second method I should know is what percentage I should employ. Third method I should know is for how many periods should I employ. Yes or no? Yes or no? So these are the three things. Now, if you are in accounts, if you want to do depreciation in accounts, you can claim what methods? In accounts, depreciation will happen as per. What are the methods of depreciation in accounts, ma? You have SLM. Then that's all, only one method in accounts. You have SLM, you have WDV, yes or no? And then you have some more methods, high accelerated depreciation method, annuity method, this method, that method. Most commonly used is SLM and WDV. Yes, income tax comes and says both methods are there. Even income tax permits SLM and WDV. In income tax permits SLM and WDV with the condition that SLM is only permitted for power sector. What sector? Power sector. Income tax comes and says if you want to claim depreciation on SLM basis, you should be a power sector company. Which means you should be in the business of generating electricity. Rahul, Appo, that means WDV method is for all assessees. WDV method is for all assessees. Income tax comes and says accounts may tell you to do depreciation as per SLM or as per WDV. I don't care. In income tax, you can only do depreciation as per WDV. But you can do depreciation as per SLM also, provided you are power sector. Rahul, power sector wants to do WDV method. Permitted, not permitted? Permitted. Power sector can choose between SLM and WDV. Any other assessee can choose only WDV. Yes or no? This is what the methods of depreciation are. In your exams, you are only going to follow WDV. You are predominantly going to follow WDV. Power sector very rarely comes in exam. Yes, this is the first thing. I told you I need three items. First item is method. Second item is rate. Yes. Now, in accounts, generally rate and all will not be given. What you'll do in accounts, you'll do this cost of the asset minus residual value divided by the life of the asset. Apdi vechi depreciation panveenga. Correct? Where they'll come and say you find the life of each asset, and each asset you can have a different depreciation rate. Now, ask yourself a simple question. Do you think income tax is that complicated to have multiple rates for multiple assets? No. They said, Rahul, ivlo complication ennala mudiyadu. I cannot keep having a different depreciation rate for every asset. same computer you're saying 1 year you're saying 10%, next year you're saying 20%. Does it make sense? No, I want consistency. I want consistency. So they introduced this concept called as block of asset. They introduced this concept called as block of asset. Rahul, what do you mean by block of asset? Block of asset means a specific asset clubbed with common assets of same depreciation rate. What is it? It is a specific asset which is clubbed with common assets having a specific depreciation rate. Rahul, what do you mean by this? Assume. What is happening if you are doing plant and machinery? If you are doing plant and machinery, general rate is 15%. General rate is 15%. Vehicles also general rate is 15%. Rahul, can they both together become a block? Yes. They both can together become a block. That is called as block of asset concept. Because they have a same depreciation rate and the same nature. That is called as block of asset. Income tax came and said, I will give you a block of asset concept. And I will tell you what the depreciation rate is. Who am I? Income tax. So income tax told, forget accounts. I don't want different depreciation rates for different people. I will tell you what depreciation rates are. You follow that depreciation rates. Rahul, what are the depreciation rates? They have come and defined these many depreciation rates. We're going to read the depreciation rates together. Okay. On the heading, you will see blue color building. Which means that is one block. Yes or no? Yes. Don't worry about it. You need to worry about the color and everything. You will see ABC. Which means any item under that ABC is a block. Under that ABC is a block. Yes. So first asset is called as building. Income tax came and said, if you have a building, the general depreciation rate for you is 10%. But if I find out that you are using this building for accommodation and residential purpose, it will become 5%. Hey, question to you. You have a building. This building is for business purpose or personal purpose? Business purpose. Then only you can claim depreciation. Yes or no? Now you have a building for business purpose. How can you have a building in business purpose for accommodation? What are we talking about the moment we say we have a building for accommodation or residential purpose? Employees maybe? Very good. You're looking at an RFA scenario. What is RFA? Rent-free accommodation. A scenario where company has a building and this building is given to his employees for living. Yes, if you have seen in government and all, we have something called as government quarters. Buildings are owned by government, given to its employees. That is the building used for residential purpose. Yes, which means if you are going to give your building to your employees for staying, or you could have been in the business of letting out properties. That could also be used for residential purpose. Those kind of buildings will be charged at 5%. If those are not the kind of buildings, it will be charged for 10%. If those are the buildings which is not charged for, then it will be charged for 10% with an extra item called as temporary structures. What structures? If you have created a building which is a temporary structure, income tax tells you can claim the highest depreciation which is there in income tax. In income tax, the highest depreciation is only 40. So you will be allowed 40. Rahul, what is temporary structures, Rahul? You can have a scenario of, let's say for example, you are in a building. The building is under construction. Now you would have noticed when you go and buy a house under construction, the house will have something called as a model house. Yes, where the seller will come and show you, sir, after this building gets ready, this is how the house will look like. You can look at this house. If you're happy, you can buy the building. That model house is called as temporary structure. Those temporary structures will be there for a longer time or for a shorter time. Therefore, the depreciation rate is given as 40%. Therefore, the depreciation rate is given as 40%. Yes or no? Yes or no? Next item is furniture. Next item is furniture. Furniture is 10%. Furniture is 10%. Yes or no? Yes. So, any kind of building is 10%. Furniture is also 10%. But please to understand, building is a different block. Furniture is a different block. Building is a different block and furniture is a different block. Just because they have a same depreciation rate, you cannot club them together. You cannot club them together. They are a different block. They are a different block because the nature of the asset itself is different. The nature of the asset itself is different. Yes. Next is called your plant and machinery. Next is called your plant and machinery. Under depreciation chapter, plant and machinery is the garbage chapter. Plant and machinery is the garbage section, which means everything which is not forming in the other blocks will form in plant and machinery. Yes, anything which does not form in other blocks will form in plant and machinery. Income tax comes and says if you have a general plant and machinery, rate is 15%. Rate is what? 15%. General plant and machinery rate is 15%. If you have a motor car rate is also 15%. But if you are going to use this motor car for hire, which means you are in the business of giving this car to someone else for driving. You are in the business of giving this car to someone else for driving. Example. Ola, Uber, Fast Track. Yes, all these people, they have cars, they are giving it to their drivers for driving. So this is called as motor cars given on hire. Motor car given on hire, that will be at the rate of 30%. That will be at the rate of 30%. Yes or no? Yes, any kind of motor cars which you are using for hire will be at the rate of 30%. Then if you have any kind of aeroplanes, Rahul, aeroplanes will generally destroy faster or destroy slower? Aeroplanes will generally destroy faster or destroy slower? Aeroplanes will destroy faster. If aeroplanes are going to destroy faster, the depreciation rate should be highest or lowest? Highest. Therefore, 40. Rahul, computers will destroy faster, destroy slower? Computers will become obsolete faster or obsolete slower? It will become obsolete faster. It's an electronic product. Okay. Today it is important, tomorrow it may not be important. So it will depreciate faster or depreciate slower? It will be depreciating faster. Rate of depreciation should be 40. Rate of depreciation should be 40. Yes. Books. Rahul, how many of you have your inter books even now? No? Yes. Understand. Books are also similar to faster depreciation. Books have a certain validity period. You stop using the books the moment your requirement of the book is over. Therefore, books also depreciate faster, depreciate slower? They depreciate faster. So depreciation rate should be 40. Yes or no? Yes. Next. Any kind of pollution or waste control equipments, life-saving equipments. Hey, these are all the equipments which are helping you do better business for the society or wrong business for the society? Better business for the society. So should I promote these or not promote these? We should promote these. So depreciation should be higher or lower? Higher. So therefore it is 40. And then goodwill. Then intangible asset. Intangible asset rate is given as 25. Intangible asset is given as 25 except for goodwill. Because goodwill rate is 0. Yes or no? Yes. Rahul, from exam perspective, do I have to remember the rates? Rahul? Yes, you have to remember the rates. Rahul, there are so many rates in your book, so how many should I remember? Trust me, this is half the rates. In ICI material, depreciation rate itself is for 4 sides. They have literally copy pasted the whole income tax act. Same things will keep repeating again and again. They have put 4 sides. I try to cover it in half a page. In this itself, I'll come and tell you what to read for exam. You see the red highlights? That is what comes for exam. Please mark those items alone. Those items are what you need to read for exam. Balance items, Rahul, how to remember? Simple. Ask yourself a simple question. If the asset is depreciating faster, is the life of the asset smaller or bigger? If you say the life of the asset is smaller, depreciation will become 40. If you say, Rahul, it's a very good product which is going to help a market to grow, in that case rate will become 40. Balance items, you know the rates. Yes or no? Yes. So what are the rates to remember from exam perspective, Rahul? Building will be 10%. Rates to remember is building will be 10%, furniture will be 10%, plant and machinery will be 15%, motor car will be 15%, but if it is a hired motor car, it will be 30%, computers will be 40%. Computers will be 40%, books will be 40%, intangibles will be 25%. Intangibles will be 25%. In the rates mattu padicha poro. From exam perspective, this is enough. From exam perspective, this is enough. Yes or no? Yes or no? Yes, yes, this is. Most of the assets in the 4 pages will show rate of 40. Okay, I'll give you examples. Question will say solar panels, windmill panel, windmill, then they will have items called as pollution control equipments, this item, that item, pollution control equipment and naalvati kutturpanga. Okay, so all these items you don't have to read, you know automatically that these are very good products and going to promote the market. You can directly put 40, so you don't have to read all those markups. Okay, there and all they would have come and defined one by one item. You don't need so many definitions. Income tax exam they will give you the rate. Okay, so you don't have to read so many definitions and all. Generally, if nothing is falling in this, it will be 40 only. Clear? This is what the idea is. Keep that in mind. Can we go forward? Yes, ma. I'm coming to that. Here 2 minutes. Okay, now these are the rates, but these looks very general. I'm going to give you certain illustrations. You tell me whether what will it get classified into. Yes or no? Yes. Item number 1, chair, furniture and fittings. Yes. Item number 2, office equipments. Item number 2, office equipments. It will be plant and machinery. Office equipments does not necessarily mean furniture. And I told you, if you don't see a clear answer, it is always the garbage section, which is your plant and machinery. Yes. So it is there in my book in the very end, but just for your convenience, you can put it here also. It is called as office equipments. Computers, office equipments. When we end this chapter, I told you in the end of the chapter, I've given some special adjustments and all. In that, I've already put it, but just for your convenience, you can put it here also. Yes or no? Yes. Next, Rahul, I have bought a Windows 11 software. Which I'm going to install in my computer. So that I can use it in my computer. Why is it not intangible asset? Understand, the software which you bought, can you use it independently? No, you cannot use it independently. You need the computer for it to work. Which means computer is more important than the software. That is why even income tax comes and says it is computers including computer software. Yes or no? Next. Rahul, I have bought a printer. I've bought a printer. Which block? Computers. Why? Is it a part of computer? Okay. Very good. Understand, when you have a printer is not going to work independently. It is called as a computer peripheral. What is it called as? Computer peripheral. Computer peripheral means it's an item part of computer. It is an item which is a part of computer. Without the computer, printer cannot work. Which means computer is more important, printer is not so important. Yes. So even if you have a printer will again be classified under computers. Printer will also be classified under computers. Yes or no? Yes. Next, Rahul, mouse. Computer. Scanner. Computers. Yes. All these items are your case law. If you notice on the bottom, it says computer peripherals like printer, UPS, scanners, servers form an integral part of the computer system and hence cannot be used without the computers. Hence, they would also be eligible for the same depreciation rate as computers, which is 40%. which is 40%. This was decided in Delhi High Court cases of BSES Yamuna Powers and Orient Ceramics and Industries Limited. Orient Ceramics and Industries Limited. Understand, the block does not actually speak of computer peripherals. Courts have come and decided that when you talk about computer peripherals, it is as same as computers, and therefore it is eligible for 40%. It is eligible for 40%. Coming to the next part. Rahul, I have an Samsung Galaxy Note 10 mobile phone. I have a Samsung Galaxy Note 10 mobile phone. Yes.
So whether it will be a computer or plant and machinery.
That is what the question is. That is exactly what the question is. You are the judge, Ma. You decide what do you want. That is why I am asking you. I want you people to become the future judges. What will you want? Will you want it to be computer or will you want it to be plant and machinery? I am not telling think from an assessee angle. I am saying think from a law angle. Think from a law angle. Do you want it to be a plant and machinery or a computer? Think quickly. What do you think makes more sense? See, look at the same example which I gave earlier. When I told printers. I told printers are an important part of computers and therefore are classified as computers. Do you think mobile phones are an important part of computers? Do you think mobile phones can work independently? Yes. So which means what is covered here is only computer. What is not covered here is mobile phones. If it is not covered in mobile phones, it will automatically go to plant and machinery. Therefore, it is not just office equipments, it is also mobile phones which are covered as plant and machinery. Case law is on the bottom. It says EPABX and mobile phones are not computers and hence are eligible only for a depreciation of 15%. Federal Bank Limited versus ACIT, Kerala High Court. Yes, Federal Bank made an appeal before the Kerala High Court coming and saying, sir, printers and all you have allowed computers. Why don't you allow it for mobile phones? The Kerala High Court came and said, boss, mobile phones can work independently. It does not have to be a computer. Therefore, classify it as mobile phones. Therefore, classify it as plant and machinery. Yes or no? Yes. Question to you, Rahul. Tablets. You know what is tablets? The iPad and all those things. Yes, tablets. Computer or mobile phones? Mobile phones. Okay. You have Microsoft Surface laptop. I don't know if you have seen the laptop. What happens is you can split the laptop. Okay. When you attach the keyboard, it becomes a laptop. You remove the keyboard, it becomes a tablet. Yes. Computer or mobile phone? When you attach a laptop, you can use it as a laptop. When you attach the keyboard, it becomes a laptop. When you remove the laptop keyboard, it becomes a tablet. You've seen that things? You've seen? Now, this is my tablet on which I'm writing right now. I have a keyboard also. If I put the keyboard on it, it will become a laptop. Okay. If I remove the keyboard, it will become a tablet. Yes. Question to you. Is it a computer or a mobile phone? Is it a computer or a mobile phone? If you ask me, I would say, sorry, come again? Very good. Understand, for me the intention is important. The moment I bought a tablet, was my intention to use it as a mobile phone or was my intention to use it as a computer? Yes, when I bought this tablet, my intention was to write on it and use it for my classes, which means I am not going to use it as a mobile phone. I'm going to use more it as a computer. Yes or no? So therefore, tablets are generally classified as computers. You may come and tell me that, Rahul, iPad, there are two kinds of iPad. One iPad you can put SIM also. It becomes mobile phone also. I do agree. But please understand, how many people in the market actually put a SIM in the iPad and call from it? What will people generally do? They will, even though they put a SIM inside it, they will hardly take calls from it. They will still have a separate phone. Yes or no? Which means the tablet which they have is generally for their laptop purposes. It's generally for their laptop purposes. So I would like to classify them as computers. I would like to classify them as computers. But if you want to be on a safer side, you can also do it as plant and machinery. Both are right. Both are right. It depends on your risk appetite. It depends on your risk appetite. This is what income tax does not clarify. This is what income tax does not clarify, which means it can either be a computer or it can be a plant and machinery. Normally, I would recommend to put it under computers. I would recommend to put it under computers. Yes or no? Yes or no? Yes. Can we go for? Can we go for? Yes. Now, notice on the top. These are your depreciation rates. These are your depreciation rates. Now, the issue which happened is, Rahul, this is the depreciation rate per month or per annum? This is per annum depreciation rate. This is per annum depreciation rate. Now, I am going back to accounts. I am going back to accounts. Let's assume accounts comes and says building you have to charge 10% depreciation. Building you have to charge 10% depreciation. And what happened in accounts is, accounts you bought this building on 1st June. When did you buy this building? You bought this building on 1st June 2023. You bought this building on 1st June 2023, and in accounts they are saying you have to charge 10% depreciation. You have to charge 10% depreciation, assuming that the building is costing 10 lakhs. Building is costing 10 lakhs. You will charge how much depreciation? 10%. Will you charge full 10% depreciation, Rahul, in accounts? No, because you bought the asset only on 1st June. You bought the asset only on 1st June. You did not use the asset for 2 months, April and May. Therefore, you will charge depreciation only for 10 months. This is how accounts works. Yes or no? This is how accounts works. Now, imagine you are in a company called Reliance. Imagine you are in a company called Reliance. On a daily basis, will they buy one asset or will they buy many assets? On a daily basis, they'll buy many assets. They have many factories. Every factory will buy assets. Yes or no? So, on a daily basis, you may buy 500 assets. On a yearly basis, you may buy 5,000 assets. Yes or no? Imagine you are the assessing officer of Reliance. You are the assessing officer on Reliance. Per month basis, they are buying 5,000 assets. Overall, they have bought 60,000 assets. Overall, they have bought 60,000 assets. Reliance has given you some 500 pages document. In that 500 pages document, they are coming and saying, this asset I bought on 6th January, therefore 40 days depreciation. This asset I bought on 10th January, therefore 36 days depreciation. This asset I bought on 6th June, therefore 9 months depreciation. This asset I bought for this many months, therefore this depreciation. Do you think assessing officer can sit and verify? Do you think assessing officer can sit and verify? No. He cannot have that verification model because it is very difficult for him. And at the end of the day, assessing officer doesn't even know maths properly. Yes or no? If you tell an assessing officer, no sir, there are 365 days in the year in which I have used the asset on 10th June, therefore I am done for 264 days. He will come and tell, find out how 264 came and prove me 264. He will not even understand what is 264 by 365. Proportion, yes or no? Do you think income tax officers are qualified CS? Do you think they are qualified BComs? Do you think they have learned the subject of tax before they become income tax officers also? No. Income tax officer ka basic qualification is you should be an IRS. What should you be? What is the basic qualification to be an IRS, Rahul? You should go and write a public exam. What are the basic subjects in public exam, Rahul? Any subject is allowed. Any subject is allowed. Which means you can do agriculture, qualify IRS, sit in income tax department, know nothing about income tax. Know nothing about income tax. You will still be an income tax officer. You will still be an income tax officer. I am telling this because my assessing officer, not my company's assessing officer, is an assessing officer who has done an agriculture background. She was a BA agriculture. She decided to sit for public exams. She wanted to become IAS but could not qualify the exams. Therefore, she became IRS. Became my assessing officer. Today takes handle of my assessment. Today handles my assessment. My company is worth 3,500 crores turnover. 3,500 crores turnover. That company she is handling assessment. She is handling assessment. Every day when I go to her and I come and tell, ma'am, this is how I did it, she will come and ask me, why did you do it like this? I'll be like, ma'am, this is how maths work. This is how maths work. I have to teach her maths first before I teach her income tax. Imagine my assessing officer is like this. India, how many assessing officers are there? If you tell every assessing officer that you have to do depreciation based on per day basis, do you think they'll be able to understand? No. Income tax said, boss, accounts is very complicated. It is a little too complicated for my assessing officers to understand. Let me do one thing. Let me break my year into half. If you purchase the asset in the first half, depreciation is 100%. If you purchase the asset in second half, depreciation is 50%. Simple. Yes. So they came and said, if I find out that you have put to use the asset, for at least 180 days. If you put to use the asset for at least 180 days, I will give you 100% of the depreciation rate. I will give you what? 100% of the depreciation rate. If you have put to use the asset for less than 180 days, I will give you 50% of the depreciation rate. 50% of the depreciation rate. In simple words, Rahul, on the left side, the rate which you have shown is the rate as per 100%. Is the rate as per 100%. Assuming you have put to use the asset for less than 180 days, you will make half the depreciation, which means 10 will become 5, 10 will become 5, 15 will become 7.5, 15 will become 7.5, 30 will become 15, 40 will become 20, 25 will become 12.5. 25 will become 12.5. Yes or no? Yes, this is what income tax says. This is what income tax says. The rates which are given to you are the 100% rates. You have to also consider the 50% rate only if you put the asset to use for less than 180 days. You put the asset to use for less than 180 days. Question to you, Rahul. I bought the building on 1st June. I put the asset to use on 1st July. I put to use the asset on 1st July. I will get depreciation at the rate of 10 lakhs asset. Depreciation rate is how much, ma? 10% for building into 100% or 50%? 100%. Why, Rahul, 100%? Because asset has been put to use for more than 180 days. Rahul, I bought the asset on 1st June. I actually started using the asset on 1st December 2023. I started using the asset only from 1st December 2023. My depreciation will be 10 lakhs into 10% into 1 by 2. 50% into 50% into 1 by 2. Yes or no? Yes or no? Yes, this is what it is. Now the question is, Rahul, this asset of 1st December, you have bought into your block. Current year you have charged 5%. This is for PY 23-24. Yes or no? This is for PY 23-24. Rahul, for PY 24-25, what will be the rate? It will be 10% or 5%? It will be 10%. Why, Rahul, will be 10%? Because the asset is now part of my opening block. The moment the asset was part of my opening block, it is put to use for more than 180 days, which means asset rate will become 10% into 100. 10% into 100. In simple words, Rahul, this 50% rate only applies in the first year of asset. The moment the asset is gone into your block, it will never apply. Yes or no? Rahul. I bought an asset on 1st June 23. Unfortunately, I did not put to use the asset till 31st March 24. I did not even put the asset to use till 31st March 2024. In previous year 23-24, I will get a depreciation of. In previous year 23-24, I will get a depreciation of 0. Why, Rahul, 0? Because the asset is not put to use. Yes or no? Yes, Rahul, I have actually put to use the asset on 1st July 24. In PY 24-25, I will get a depreciation at the rate of 100%, which means 10% into 100%. Yes or no? Rahul, in PY 25-26, I have not put to use the asset on 1st July. I actually put to use the asset on 1st December 24. In PY 24-25, I will get a depreciation at the rate of I will get a depreciation at the rate of 10% into what? It will still be 100%. It will still be 100%. You are telling me, Rahul, depreciation you should have claimed 50% only because the asset is put to use for less than 180 days. Yes, I don't deny that, but understand, this asset is the part of your opening block, not part of your opening block. The moment you bought the asset, you put it into your block. It is just that you did not claim depreciation. Yes or no? So is it there in your block? Not there in the block. It is there in the block. If it is there in the block, have you lost the identity of the asset, or do you know still the asset? Do you still know the asset, or have you lost the identity? You have lost the identity. You don't know about the asset. You don't know about the asset because it is a part of your opening WDV now. It is a part of your opening WDV now. The moment an asset is a part of your opening WDV, depreciation automatically becomes 100. Depreciation automatically becomes 100. I am now not going to look for your 50 or 100 because the asset is put to use is not a criteria. Asset order put to use is not the criteria. Put to use order criteria only comes in the first year of acquisition. First year of acquisition. Is this the first year of acquisition or second year of acquisition? It is the second year of acquisition. The moment it is the second year of acquisition, it is already a part of your opening block, and therefore asset will continue to be depreciated at 100%. Continue to be depreciated at 100%. Yes or no? Yes or no? Rahul, where is it in the books? You will find it in the first page, 37. You will find it in page number 37. We'll find it in page number 37. Let's read it together. It says, what is the rate of depreciation, Rahul? On opening WDV and assets acquired and put to use for at least 180 days, it will be 100% depreciation. If it is acquired and put to use for less than 180 days, it is 50%. If you have not even acquired, if you have acquired but not put to use, it is no depreciation. Read the green box. No, read the green box. It says, note the and between acquired and put to use. Note the and between acquired and put to use. Which and am I talking about, Rahul? I am talking about this and. I'm talking about this and. Acquired and put to use for less than 180 days, which means they both should happen in the same year. They both should happen in the same year. Notice the word and between the acquired and the put to use. This means that the restriction of 50% of the rate is applicable only in case where the asset is acquired and put to use for less than 180 days in the same year. Less than 180 days in the same year. However, where the year of acquisition is different from the year in which the asset is first put to use, the rate of depreciation will continue to go back to 100% because the asset is now part of your opening block. Because the asset is now part of your opening block. For example, if the plant and machinery was acquired on 22-23 and was put to use after 4th October 23, and was put to use after 4th October 23, which is less than 180 days in the previous year 23-24, the depreciation will continue to be the 100% of the rate prescribed and will not jump down to 50. Please mark this box as important. Please mark this box as important. This box has come as MCQs in the past. This box has come as MCQs in the past, where they'll come and say that you bought an asset last year and you have put to use for less than 180 days in the current year. Are you eligible for 100% or 50%? You will say you are eligible for 100% because it is a part of my opening WDV. It is a part of my opening WDV. Yes or no? Yes. For the sake of reference and convenience, what you can do is you can put it here also. On opening WDV, you can put including asset of last year not put to use. Including what? Asset of last year not put to use, which means even if the opening WDV has an asset which was not put to use in the last year but is going to be put to use in the current year, I will not look at the condition of 50%, I will only look at the condition of 100%. I will only look at the condition of 100%. Check and let me know if you understand, or do I have to explain it again?
So here that purpose of having depreciation only after 50 is lost.
It is. The point is they only wanted to focus. See, the idea what is happening, no, Ritanya, is that in income tax, like I told you, it is very difficult for me to identify individual assets. Okay, income tax case comes and says that, boss, for me to identify individual assets and keep a track of it is extremely difficult because as an assessing officer, I have to handle audits of at least 70, 80 people in a single year, right? If I have to keep a track of every single asset which one company has, then it becomes extremely challenging for me, which is why the block of asset concept was introduced, where they came and said, the moment an asset enters my block, I don't want to bother about it anymore. For me, the asset has lost its identity. I don't even have to look at the asset anymore, is what the idea is. Yes. So the moment the asset came to my opening WDV, do you expect the assessing officer to tomorrow keep a track of what assets were not put to use? No. Assessing officer will come and say, it is not possible humanly for me to keep a track of assets which you did not put to use last year. So whatever assets were there in the block, I will continue to claim full depreciation. Clear? Yes. The idea is that, you have used the word and therefore there is a loophole in the act. That's all, nothing else. Clear? Can we go forward? Yes. Now, we have done what is called as methods of depreciation, rate of depreciation, how much to claim depreciation. This is what we did. Now, I told you in depreciation we have two methods. One method is called as SLM method, one method is called as WDV method. Now, I told you SLM method is a normal method. You do the same as accounts. Which means you have an asset. On the asset, will you start and find out what is my residual value and everything? No, you will not find out my residual value because I have given you the rate. So I will take the cost into the depreciation percentage, and that will be the rate I will continue forever. Just that in the first year, if it is less than 180, I will do 50%. Balance every year I will do 100%. That's all is the idea. Simple, straightforward depreciation for SLM basis. Yes or no? Yes. Now, the problem comes when you are doing WDV method. Income tax comes and says, you prepare the same chart as accounts. I will make some modifications. How will you do WDV method in accounts? You will need the opening WDV. Yes or no? You will need the opening WDV. On this, you will add the additions made in the current year. Then you will reduce the WDV of asset sold. Yes or no? In accounts, what will you reduce? You will reduce the WDV of the assets sold. This will arrive at the final cost. On this final cost, you will charge depreciation. Yes or no? On this final cost, you will charge depreciation. What will you charge depreciation on, Rahul? Depreciation will be charged on opening WDV minus WDV of assets sold and additions ka tanya. In accounts, you will do proportionate basis. Number of months you have used and everything. Yes. And finally, you will arrive at closing WDV. Yes or no? Finally, you will arrive at closing WDV. This is how you will do accounts. I will follow the same format. The only difference is now I am going to create something called as block of assets. In block of assets, I told you there are certain items. One item is called as opening WDV. Then it is called as more than 180 days. Then it is called as less than 180 days. And finally, it is not put to use. Yes or no? Start filling columns. First column is called as opening WDV. Which of the line items will have opening WDV? It will be the opening WDV column. Yes or no? Next, additions. Will opening WDV row have an additions? No. It will be part of more than 180, less than 180, not put to use. Yes or no? Yes. I am holding the balance part. Coming to depreciation. On the more than 180, you will claim 100%. On the less than 180, you will claim 50%. On the not put to use, you will claim no depreciation. On opening WDV, you will claim 100%. Yes or no? This is what your format is in accounts. I'm going to follow the same format. I'm going to make some changes. Let's look at the headings. First heading is called as opening WDV. What is opening WDV according to you? What is opening WDV according to you? Opening WDV means closing WDV of last year. Closing WDV of last year. No doubts. No doubts. Opening WDV means closing WDV of last year. Clear? Clear? Next heading is called as additions. Next heading is called as additions. Additions means the assets which you purchase in the current year. Assets which you purchase in the current year. Now, you have purchased assets in the current year, which means you need to value the assets for you to bring inside. You need to value the assets to bring inside. So therefore, you need to know how to value an asset. You need to know how to value an asset. Yes or no? Yes or no? Yes. In accounts, how do you value an asset? In accounts, how do you value an asset? What and all do you add to the cost of the asset? First item is the purchase price. First item is obviously the purchase price. Yes. Think and tell me what and all items form part of your asset. What and all items form part of your asset. First item is purchase price. Next. What and all will be your expenses? Expense incurred to put the asset to use, like installation charges. Very good. Installation charges. Next. That's all. Oh? Then think, no, what else? You are planning to buy a building. You're planning to, let's say not building, you're planning to buy a machinery. You're planning to buy a machinery. What and all expenses will you incur? Think about it. First, what you'll do, you'll first go to a person and buy the machinery. You'll buy the machinery, for which he'll give you an invoice. In the invoice, there will be two components. One component will be called as the price of the machine. Second component will be your invoice le rendu component irukum. One will be the price, second will be GST. GST also you are paying. Yes or no? So GST also has to be added. Yes or no? Yes or no? No. GST is added only if ITC cannot be claimed. Only if ITC cannot be claimed. Think about it. No, you have paid GST on the asset. You have paid GST on the asset, and tomorrow you are going to make the ITC claim of it. Which means the money which you paid has come back to you, not come back to you. It has come back to you, which means it is an asset cost, not cost. It is not a cost. So which means I am only including those kind of expenses for which ITC is not claimable. Now, while I am putting the word GST, it automatically means any other direct taxes also, any other indirect taxes also. It can be customs, it can be any indirect tax, Yes. So first item was installation, second item is GST. Yes. So first what you did, you went to that person, you came and said, I want to buy a machinery. He gave you an invoice. In the invoice where purchase price and GST both are considered. Then you bought the machinery. Will you carry it in your hand and come to office? No, you need transportation charges. So any kind of transport or carriage outward charges. Yes or no? Yes, you booked a lorry. Lorry la machinery is coming. Now, you are very doubtful that the lorry will reach to your office because in the middle there is a earthquake. So you need to insure yourself. So therefore, you will pay insurance premium. Yes or no? You will pay an insurance premium. Correct? Not correct? Correct. Yes. Now, you have paid insurance premium also. Property has come to your office. Machinery is in the outside. You need to install. So therefore, installation charges. Yes. You install the machinery. The moment you install the machinery, you will start using the machinery, or you try to test run. So test run also you can incur some expenses. Yes or no? So you incur some test run charges. Yes or no? Yes. Next. Rahul, machinery was very pricey. So I had to take a loan for that. I have taken loan to pay the machinery. Loan will have something called as interest. In your inter syllabus, you would have learnt a chapter called as borrowing cost. Have you heard about this chapter? Accounts, there is a chapter called as borrowing cost. The chapter of borrowing cost comes and says that whenever you have taken a loan for purchasing an asset, interest which you are incurring on the loan, interest which you are incurring on the loan should also be capitalized until the asset is ready to use, until the asset is ready to use. Since I am in income tax, I am bothered about ready to use or put to use, put to use. So therefore I will add any kind of interest on loan up to the date on which asset is put to use. The date on which asset is put to use. Yes or no? Yes or no? Yes, this is what my expenses will be, because I have taken a loan. Loan is also having an interest, so I am paying two money now. I once paid the purchase price also, I am paying the interest cost also. Interest cost up to the asset is ready to use will be capitalized. After that it will be charged to P&L. After that it will be charged to P&L. This is a standard called as borrowing cost. This is a standard called as borrowing cost. Yes or no? Yes or no? Yes or no? Yes, yes. Now Rahul, I did a test run. In the test run I found some product. I will keep this product in my home, or I'll sell it out. I will sell it out. If I'm going to sell it out, I will receive money, not receive money. I will receive money. Hey, that money which I am received is before the asset is ready to use or after the asset is ready to use? Have I actually used the asset? No. I'm still on a test run. Have I used the asset? No. Which means this money has come to me before the asset is ready put to use, or not after the asset is put to use? It is before the asset is put to use, which means this is an income generated from my asset cost itself. It's an income generated from my asset cost itself. Can I reduce? Not reduce. Can I reduce? Yes. So I'm going to reduce. What am I going to reduce? Sale value of the test run product. Yes or no? Yes or no? Now, I bought this machinery and I was using it. Government of India noticed me. And they are very happy with my work. They came and said, Rahul, the asset which you have bought, I am very happy that you have used this asset. It has helped me grow my country. I want to sponsor this asset for you. So government will give you something called as subsidy. Now, I paid 1 crore. Government gave me back 10 lakhs. Technically, my cost has become 90 lakhs. How is my cost becoming 90 lakhs, Rahul? Because I have to reduce the government grant. I have to reduce my government grants. Now, understand, when you are trying to reduce government grants, you cannot reduce every government grant. If government is giving you a grant for you to do your normal business, is it linked to my asset? No. So I am only talking about government grants which are linked to the asset. In simple words, government should clearly come and notify you that because you purchased this asset, I gave you a grant. If that notification is given to you, then only this is reduced. Otherwise, you have to give it full to P&L. Yes or no? Yes. This will become your price of asset. Hey, in simple words, if I have to clarify this very clearly to you, in simple words, all cost which is incurred up to the date on which asset is very good, put to use. All cost incurred up to the date on which the asset is put to use will be capitalized. Yes or no? Yes, this is a simple understanding. Accounts also follows the same logic. Income tax also follows the same logic. The only difference is accounts says up to the date on which the asset is ready to use. I am saying up to the date on which the asset is put to use. That is what the idea is. Yes. Income tax also gives you one second option, second condition. Income tax also gives you a second condition. The second condition, like income tax is coming and saying, Rahul, I opened up your books. And I saw that you've capitalized an asset worth 1 crore. You've capitalized an asset worth 1 crore. I went and I asked you, where did this 1 crore come from? Tell me, how did you pay? Tell me, how did you pay? I said, sir, I paid it through cash. I'm saying, give me the proof. How do I know that you've actually paid 1 crore in cash? Yes or no? So I need some proof. I said, sir, it's cash payment, sir. I cannot have a proof. Assessing officer says, if you don't have a proof, how do I trust you that this is black money or white money? Yes or no? So therefore, income tax also puts an exception. Where the exception comes and says, if you make a payment more than 10,000 to one person in one day. If you make a payment to one person in one day more than 10,000 by non-permissible modes. What modes? Non-permissible modes. Rahul, what are the non-permissible modes under income tax? We come and say you should make the payment by account pay check, account pay draft, electronic clearing system, and other notified modes. We will read it when we go to 40A3. we will read it once again. Right now it is non-permissible modes. It says, when you end up making a payment of more than 10,000 to one person in one day by non-permissible modes, I will consider that as a cost, not consider it as cost. I will consider it as a cost, not consider it as a cost. I will not consider it as a cost. So what will happen? That payment will be ignored. In simple words, there is a asset which you have. Okay, your asset is worth 1 crore. Assessing officer told you, tell me, how did you get this 1 crore payment? How did you make this 1 crore payment? You said, sir, 80 lakh rupees I made through bank. 10 lakh rupees I made by account pay check. Michche 10 lakhs irukla, sir. The 10 lakhs I actually gave 11,000 rupees per day. 11,000 rupees per day to that person. Question to you, 80 lakhs allowed, not allowed? Allowed. 10 lakhs allowed, not allowed? Allowed. Next 10 lakhs allowed, not allowed? Not allowed, because you've made the payment more than 10,000 in cash. In this case, your asset cost will now become 90 lakhs. You can only claim depreciation on 90 lakhs. Yes or no? This is what the provision say. The provision says, addition means any cost which is incurred by you up to the date on which the asset is put to use. But it does not include any cost which you have made more than 10,000 to one person in one day by non-permissible modes. Yes or no? Yes. See, this is what the format which we wrote. In that format, I told how to value additions. Additions means any price which you have paid until the asset is put to use. It's like purchase price, installation charges, carriage charges, any taxes which you paid on which you cannot claim ITC, trial run cost, interest cost, any subsidy received from the government will be reduced, any kind of consideration from sale of trial run products will be reduced. Exceptionally, they are coming and saying, if you have made any payment which is otherwise than by account pay check, account pay draft, electronic clearing system, or permissible modes more than 10,000, one person, one day, cost will be ignored. I am very clearly using my words. I am saying cost will be ignored. I am not saying that the payment will be disallowed. or the payment will be added. Please understand, there is no disallowance, there is no addition, because this is an capex. Is it there in the P&L? Not there in the P&L. Is it there in the P&L? Not there in the P&L. It is not there in the P&L. When it is not there in the P&L, can you disallow something? No. Can you add something? No. What can I maximum do is I can ignore the cost. I am saying it shall not form part of the cost. It shall not form part of the cost. Be very careful about this. It is not that the asset is, it is not that the payment is disallowed. It is that the payment is ignored. What can be disallowed, Rahul? Only revenue expense can be disallowed. Capital expenditure cannot be disallowed. Is that clear? Yes. Any doubts? Can we go for? Yes. Income tax has also notified some special scenarios. Income tax has also notified some special scenarios where they've come and said, if there are some special scenarios, I will tell you how to value the cost. I will tell you how to value the cost because you are not able to find it out. You are not able to find it out. Scenario C. I am saying that I've acquired the asset by gift or inheritance. I've acquired the asset by gift or inheritance. Income tax comes and says, if the asset is acquired by gift or inheritance, don't worry. Whatever was the WDV of that person, you can consider it as your WDV. Whatever is the WDV of that person can be considered as your WDV. Next, I have acquired something with an intention to reduce tax. I have acquired something with an intention to reduce tax, which means when I purchased the asset, I actually purchased it in a higher price. I purchased it at a higher price because I wanted to claim more depreciation. I wanted to claim more depreciation. They say, boss, if it is found out that you are trying to cheat government, if it is found out that you are trying to cheat government, I will ignore the cost which you have found out. I will ignore the cost which you have found out and I will find out the cost. Who am I? I am the assessing officer. I am the assessing officer. So they are saying any cost will be determined by the assessing officer after the approval from his boss. After the approval from his boss. Who is his boss? His boss is JCIT. Who is JCIT? Joint Commissioner of Income Tax. We have a chapter called assessment procedure. In that I will give you the hierarchy. In that I will give you the hierarchy. Right now not relevant. Right now not relevant. In simple words, if the cost is so high that is planned to avoid taxes, cost will be changed by the assessing officer. Assessing officer will decide the cost. Assessing officer will decide the cost. Yes. Next. What I am doing is I have an asset. What do I have? I have an asset. Okay. This asset currently WDV is showing 10 lakhs. Currently WDV is showing 10 lakhs, which means if I am going to claim depreciation, maximum depreciation I will be able to claim is all 10 lakhs. Maximum depreciation I will be able to claim is only 10 lakhs. Yes or no? Yes. Now what happened is, Rahul, I have an asset worth 10 lakhs, but my business is doing really well. My business is doing really well, which means my profits are increasing. If my profits are increasing, my tax is also increasing. So what I did is I wanted to increase my expense accordingly. So what I did is I took this asset. And I gave it off to someone else. Let's say some person. Yes. Now this person was incurring losses. So what happened is I went to this person and I told, I will give this asset to you for 10 lakhs. I'll give this asset to you for 10 lakhs. What is my WDV? 10 lakhs. What have I given it for? 10 lakhs, which means my profit is 0. Will I have tax on that profit? No. Yes. So I gave it to him for 10 lakhs. Then what happened is I went to this sub person and I came and said, dear sub, do one thing. You again give me back the asset. You do one thing. You again give me back the asset for 1 crore. How much? 1 crore. Why did I ask him to give it for 1 crore? Because what will happen? He has losses. He will get a profit of 90 lakhs and he will set off the losses and he will exhaust his losses. For me, what is the benefit, Rahul? For me, the asset has now become 1 crore. If my asset has become 1 crore, I will claim depreciation on 1 crore. If I am claiming depreciation on 1 crore, my profits will come down or my profits will increase? My profits will come down. Notice the transaction. The transaction is done purely to avoid taxes. Yes or no? Yes. This model is called as sale and sale back. What is this model called? Sale and sale back, or in simple English, it is called as transferred and reacquired. In this case, income tax came and said, boss, don't do all this nonsense. Had you not sold it, the price would have been 10 lakhs. I am going to give you depreciation only on 10 lakhs. So they said, boss, I will give you depreciation only on 10 lakhs, which is nothing but the WDV of original owner. Yes or no? Now Rahul, actually no, what happened is this person did not give it for 1 crore. It actually gave it for 9 lakhs. He gave it back to him for 9 lakhs. Rahul, why did he give it for 9 lakhs? Because when I gave you the asset for 10 lakhs, you also used the asset. So you used the asset and you reduced the value. You have given it back to me for 9 lakhs. Now I have got the asset for only 9 lakhs. Do you think department will give you depreciation on 9 lakhs or 10 lakhs? Will department like to give you depreciation on 9 lakhs or 10 lakhs? Will department come and say, forget the 9 lakhs, let me give you higher depreciation? No. Department will come and say, I will give it only for 9 lakhs, which means actual purchase price. Actual purchase price. Notice, no, when it was 1 crore, you said 10 lakhs. When it is 9 lakhs, you are saying 9 lakhs, which means whichever is lower. Whichever is lower. Whichever is lower. So, in simple words, if you do a sale and a sale back, the provisions come and say that the price of the asset will be the WDV of the original owner or the price at which he acquired, whichever is lower. Whichever is lower. Clear? Yes, check. Sit. WDV when the asset was originally transferred or the price at which it is reacquired, whichever is lesser. Whichever is lesser. Next. They're saying transferred and leased back by way of lease. Transferred and leased back by way of lease, hire or otherwise. By way of hire or otherwise. Basically what I've done, I have given my asset of 10 lakhs to him and I've told, no, I will not buy the asset from you. I will take it on lease from you. I will take it on lease from you. They're saying, boss, if that is the case, don't sell it for higher prices to him. Don't sell it for higher prices to him. For that other person, it will become 10 lakhs. For the other person, it will become 10 lakhs because then only he will not be interested to give it back to you. Then only he will not be interested to give it back to you. Otherwise, he will give it to you. Otherwise, he will give it to you. So, therefore, I said, what is the WDV of the person who gave it to you? That will be the same price for the lessor now. There will be the same price for the lessor now. Yes or no? Next one is called as building used for personal purpose brought into business. Building used for personal purpose brought into business. What is happening, Rahul? I have decided to buy I had a building. Is it clear? No. I have decided to buy a building. Yes. Now, this building was in my own name. This building was in my own name. I used this building for my personal purpose for 5 years. I used this building for my personal purpose for 5 years. And now I have decided that this building will be transferred to my business. Will be transferred to my business. What is the entry which I'll pass? My entry will be building account debit to building account debit to capital account. Yes or no? My personal building I'm bringing into business, it will be called as building account debit to capital account. Now the question which then came is, Rahul, what is this price? What is this price? Because when I bought this building 5 years back, that time the building I bought it for 10 lakhs. That time I bought this building for 10 lakhs. In this last 5 years, has this building been used? Not used. Has this building been used? Not used. The building has been used by whom? By me itself. By me itself. Income tax says do one thing. Assume if the building was always in business. Assume if the building was always in business. Find out what would have been the depreciation today. Find out what would have been the WDV today. Find out what have been the WDV today. What is that meaning, Rahul? Let's say that you bought the building 5 years back. Cost would have been how much? Cost would have been 10 lakhs. Year 1 you would have charged depreciation on 10%, therefore 1 lakh. Yes, so this becomes 9 lakh. Year 2 you will charge number 90,000. So this becomes 81,000. Year 3 you will charge 8,100. Numbers quickly. 72,900. Yes. 72 or 73? Check. Is it 72 or 73? I think it's 72. Eight lakh 10,000. Sorry. It is 8 lakh 10,000. This will become 81,000. Therefore, this will become 7 lakh 29,000. 7 lakh 29,000. Year 4. Give me the WDV directly in the calculator. WDV directly. 6 lakh 56,100. Year 5. 90. Yes, income tax is saying, assume Rahul that the asset was already there in the business. Today you would have charged, your WDV would have shown 5,90,490. Assume this is your WDV. Assume this is your WDV, which means the depreciation for the balance number from the 10 lakhs to 5 lakhs, that depreciation will be ignored for you. You will not get that depreciation. Balance you can claim in the business. Balance you can claim in the business. So this will become 5,90,490. 5,90,490. Yes or no? Yes, this is what is there. This is what is there. Now I'm going to change the example. I actually bought a car 2 years back. I actually bought a car 2 years back for a price of 2 lakhs. 2 years later, I have planned to transfer it to business. Now, what is the entry which you will pass? You will pass an entry called car account debit to capital account. Car account debit to capital account. The question which then came up is, Rahul, how do you value this now? You may think that, Rahul, I should again do the same model. I can again do the same model. Income tax has actually notified the model only for building. Income tax has only notified the model for building. He has not notified it for any other person, which means in this case, you can actually claim depreciation on the whole 2 lakhs. You can claim the depreciation on the whole 2 lakhs. You will come and ask me, Rahul, how are you claiming depreciation of 2 lakhs, Rahul? That means whatever you use for personal purpose also you're getting deduction. Whatever you're using for personal purpose also you're getting deduction. I will say yes, you are eligible for it. Why we are eligible? We'll do in next class. Next class I will teach a topic to you. When I teach the topic, you'll understand better. Right now, I am saying that if you are going to do something like this, the depreciation will be done only for building part, will not be done for other assets. Yes, notice on the book I am saying, when I have a building which is used for personal purpose and brought into business, the asset cost will be actual cost of the building minus notional depreciation till the date of the acquisition, from the date of acquisition till the date of introduction. On the up you will find a box. Which comes and says any other assets will be continued to be accounted at cost. Please highlight that and keep, that's important. Any other asset will continue to be there at cost. That is what the idea is. Yes or no? You can ignore the balance items. There is something in the middle. Called as acquired from borrowed funds. We have already covered it. I told you, if you have taken an asset by way of loan, interest up to the rate on which the asset is put to use will be capitalized. Then I came and said, if you have paid any kind of excise duty, additional duty, any kind of indirect taxes, you can also add it to the cost of the asset, provided you are not eligible for ITC. If you have received any kind of subsidy, grants or reimbursements from government, you can reduce it from the cost of the asset if it is directly linked to the asset. Yes or no? Yes. And the last item, it says brought into India by a non-resident for business or profession. Income tax says that if you are a non-resident, who are you? You are a non-resident who was doing business outside. And now you have made a decision to come and do business in India. In that case, income tax is coming and saying that the assets which you bring to India, has already been used somewhere else. In that country also you would have claimed depreciation. Yes or no? So I am saying, boss, follow the same logic as building. Which means assuming that the asset was always in India. How much depreciation you would have claimed? Ignore that depreciation. Balance you can add it to the cost. This is the same logic as your building logic. Which means, in simple words, you will do cost minus notional depreciation for two people. One is if you are a non-resident. Second is if you are building. If you are a resident and any other asset, you will take it direct cost. Yes or no? Yes. This is what your computation of additions is. Any doubts? No. Great. Britannia, do you have office?
Yes, sir.
Okay.
Since it is 3C, we'll be filing.
Oh, yeah. Right. I just finished mine yesterday, so you're aware about transfer pricing then. Makes my life easy. No worries. Okay, great. Perfect. We have transfer pricing in our syllabus, so I will teach you what I can. Yeah. Anyway, looking back, we have opening WDV. We did additions now. The next item is WDV of assets sold. Now, the question which I came and asked you is that time. The moment an asset reaches your block, does it have an identity or does it lose its identity? Does it have an identity or loses its identity? Loses its identity. If the moment the asset is going to lose its identity, will you tomorrow know what is the WDV of that asset alone? Will you ever know what is the WDV of that asset alone? No, because it is a part of my block. I don't even know what asset it is. Yes or no? So in income tax, if I have to reduce WDV of the asset sold, do you think I can do it? No, because I don't even know what the asset is. So I don't even know what the WDV is. If I don't even know what the WDV is, can I reduce something like that? No. But have I made some sales? Yes. Income tax says, don't worry, boss. Don't worry. Instead of you reducing your WDV, you can end up reducing your sale value. You can end up reducing your sale value. Now you may think it is wrong. Rahul, how can you reduce the sale value itself? Because understand, asset was of 100 rupees. You have sold it for 150 rupees. You will end up selling, reducing 150 rupees. This 50 will impact my other assets. Yes or no? It will impact, but don't worry about it. The reason is logical. I'll tell you a simple question. You are in accounts. You had an asset. The asset was worth 100. Today the asset is showing a WDV of 50. You would have sold this asset for, let's say, 60. In accounts, what will you do? This difference will be called as profit. Yes, it will be called as profit on sale of asset of 10 rupees. You will put it into your P&L. Yes or no? Now question to you, is this a revenue profit or a capital profit? Is it a revenue profit or a capital profit? It is a capital profit. If it is a capital profit, can you offer it to tax? Should you offer it to tax? Not required, because I told you capital profits are generally not taxable. So what will happen? Income tax will come and say, boss, this is a capital profit. I will say this is a capital profit, therefore I will say exempt from tax. Yes or no? Now, if I tell this is exempt from tax, income tax has lost money of the 10 rupees or not lost money? It has lost money. Therefore, what I am telling is, boss, rather than me reducing 50 from the block, if I reduce 60 from the block, what is happening? That extra 10 rupees which I am reducing, for that extra 10 rupees which I reduced, will I get depreciation, not get depreciation? I lost depreciation, yes or no? I lost depreciation because I reduced more than required. When I reduced the 10 rupees from my block, depreciation on the 10 rupees also permanently went for me. Yes or no? Which means indirectly every year going forward, the 10 rupees or the depreciation is not there, which means your profits will show more or profits will show less. Your profits will show more. Indirectly, the 10 rupees which I exempted for you right now, over the years I will offer it to tax. Yes or no? Earlier, if I would have reduced only 50, 10 rupees I would have got depreciation. This year, I am not going to get depreciation because I sold it for 60. Yes or no? Yes. So the 10 rupees which is there, I am now indirectly offering to tax every year. Logical, not logical? Logical. Change the example. Rahul, the WDV is 50. What is the WDV? 50. I sold it for 40. Profit or loss? Loss. How much is the loss? Loss is 10. Yes. Now I will say, sir, this is my loss. This is there in my P&L. Assessing officer will say, this is a capital loss or revenue loss? Capital loss. So assessing officer will say, when the capital profit is exempt, capital loss should also be ignored. Capital loss should also be ignored. Yes or no? Yes. But question to you, have I genuinely made this loss? Not genuinely made this loss. I have genuinely made this loss. So which means I should get this loss. I should get this loss. So now what I'm doing is, instead of me reducing 50, which is the WDV of the asset, I am reducing only 40, which means I am not reducing 10. The moment I am not reducing 10, my 10 is there in my block still, which means on the 10 I will claim depreciation. If I am going to claim 10 depreciation on that, over the years I will increase my profit or reduce my profit? I will reduce my profit. So instead of this 10 rupees coming today, it will come to me over the years. It will come to me over the years. Technically, what I did in accounts, same thing I am doing in income tax. The only difference is, in accounts, this 10 rupees or profit or loss is coming to you in the current year. In income tax, this 10 rupees of profit or loss is coming to you over the years. How is it coming over the years, Rahul? Not because of the loss or profit, it is coming because of lower or higher depreciation. It is coming because of lower or higher depreciation, which means, does it make sense for me to reduce sale value? Yes. So income tax said, do one thing, reduce sale value. Do one thing, reduce sale value. The moment you reduce sale value, the depreciation will automatically take care of the loss or profit. It will take care of the loss or profit. Yes or no? Yes. This is what the format is. This is what the format is. What is the format in income tax? Opening WDV, make additions, add less sale value of the asset. You will arrive at the cost. On that you will do depreciation. You will arrive at the closing WDV. You will arrive at the closing WDV. Clear? Clear? Yes. We are done with the formats. Tomorrow we are going to do sums. Tomorrow we are going to do sums. Prepare the format. Read the format once again and come for depreciation chapter. All right? Yes. Done, Ratanya. Can you read it yourself? Yes. Do you have the book? Okay, perfect. Yes. So please read and revise the depreciation chapter and come. Tomorrow we have to discuss one more small thing called as additional depreciation, and then we'll do sums on depreciation. Yes. Yes. All right. Thank you, people. Have a good weekend.